Ladies and gentlemen, welcome to a Tesla live stream. Joined here by my good friend Tevis. We are both very large Tesla shareholders as a percentage of both of our portfolios. I think Tevis probably has me beat on the portfolio percentage, but it's still my second largest holding. So I'm going to make it very clear, okay? If Tesla has as bad of a day as Nvidia did yesterday, I'm wearing my Costco sweater here because I will need new employment if this goes poorly. And I am anticipating that it'll go poorly. But Tevis, how you doing?
You got to learn how to sell options, man.
That's my gosh. It wouldn't help me in my current state, I don't think.
You can at least make some money on the downturns, but yeah, doing good. Looking forward to getting through the earnings. We're going to do a market open before the earnings actually come out because I think the call is at 5, or is it 5 or 4:30?
Market close.
No, the call.
Yeah, but you said market open.
Yeah, market close. That's what I meant.
Yeah, the call is at 5:30, I actually think, which is pretty late. I didn't even realize.
Okay.
I think it's at 5:30 actually, if I'm remembering correctly. But we have Meta and Microsoft as well that we can take a look at. So, what do you want to see first? By the way, do you want to take a look at Tesla's numbers going into this? Do you want to take a look at the stock and what that's doing, down 2.3% right now?
So I think for the next 10 minutes, we can just look generally at the market, how it's going, and do the market close. And then we can jump into Meta, Microsoft, and then we can look at Tesla numbers and do the Tesla call. How's that sound?
Yeah. I'm also going to keep ServiceNow on that list as I'm a shareholder in that one as well. But between those four, that's all I'm looking at today. And yeah.
How can you own Tesla and ServiceNow? Like, how can you fall in that very, very, very slim overlap of investors who own both of those things? I don't understand.
I'm a Salesforce investor and a ServiceNow investor. I just take part in a digital transformation. That's what I really believe in. But yeah, there's many ways to do this. You know, I like centralized finance. I like crypto. You can hold both. You know, like I don't know. Lots of growth to be had. But let's keep an eye out right now. Only Meta out of these four stocks is actually doing anything positive. In fact, they got quite a bullish report today. I think a $750 price target up from $700. So that was quite positive for them. They definitely saw good gains there. ServiceNow, Microsoft, and Tesla all down. The broader market's going to be down. FOMC, the Federal Reserve decided to keep rates flat. So any commentary on that, Tevis? Did you follow that today? You're more muted than ever.
I did not follow that today. I was busy with other stuff, but the market seems to have rebounded off the fact that they paused. So I don't understand why you're saying it's bad news.
Well, no, I just think it would have been good news if we got a rate cut, but it was unexpected unexpected for it to have a rate cut. So the market did rebound, but they were not liking what they were hearing at the time.
They were pricing in like pause. I think it was 90-something% consensus at that point. So I'm not surprised we got exactly that.
Yeah. We can take a look also really quickly. I've got quite the chart on Tesla, so we can look back all the way from a quarterly basis or annual basis all the way back a couple of years to see this growth over time, and then potentially see what you're also expecting. Or if you want, I can prepare some numbers for Meta, Microsoft as well. I want to do that.
Can I show you what I bought today? And then you can give me your thoughts.
Sure.
Okay, cool. Let me share my screen.
Is it a Rep Fitness multifunctional trainer?
Close.
That's what I want.
Close. It is cash secured puts on SoFi.
Okay.
So let me know, Tanner, if this is a good move or a bad move, whether you would do this. So basically here, I sold 15 SoFi February 28th, $17 puts at $1.65. What that means is I'm committing to buy 1,500 shares of SoFi at $17 on February 28th if the price is below $17 by that time. If the price is above $17 by that time, then I collect around $2,400 in premiums, or I get to keep the $2,400 in premiums, which I was paid by selling these puts. Thoughts?
Not much thoughts. The only thought I have is, regardless of what stream that we actually do, SoFi cannot escape the conversation.
No.
No, I don't have any thoughts at all, really.
So do you think that so that's like a 10%? So I'm locking up about 24 grand and I got paid about 2,400 in premium. That's a 10% return in a month if I don't get hit. If I do get hit, then I still keep that 10%, but I have a paper loss on SoFi because I technically bought it in at 17.
Yeah.
But when you account for the premiums, the break even is about 1530, something like that, 1540. And so essentially it's like I'm buying SoFi at that price. Now, if SoFi, of course, in a month from now is trading at $12, then I'm going to have a bigger paper loss and it's not going to be worth it. But the thesis being that I'm long SoFi, and I think that we're going to be over $17 by the end of February. And I think that at any point we can go over 17 over the next month, and I can just close out those puts at a significant profit. That's the thesis.
I think that could definitely be true. You know, a lot of analysts that are coming out right now are actually coming out more positive than I thought they would. And I think that they read the report very well and understood that they understood the 2025 guidance better than I thought they would. And they're calling for great increases. So I could see a rebound with a couple more reports that place SoFi above $20 a share, that the market starts to bet on that company again, realizing that DeepSeek is actually, if anything, really positive news for SoFi, and not selling on some China news that has nothing to do with SoFi.
So you think
yeah.
it's a good move?
Yeah, sure. Yeah, which probably should scare me if we agree on the same.
You're so not into options. It's hilarious.
Not at all.
Like, I don't know, man. I'm so hooked on them as, and I know Lurker's in the chat and he's going to give me shit, or he's going to make fun of me, but it's just such a great way, because like right now I'm like, okay, cool. Like I lowered my cost basis on SoFi, fill that risk capital by like $1.60, and I, essentially made 10% in a month if I don't get hit. And if I do get hit, worst case scenario, if I do get hit, I own more SoFi. Like, well, Tevis, it's a higher cost basis. Who cares? Ultimately you're long on the company for the long term. If you buy at 16 today, or if you buy at 17 in a month, you're getting paid to essentially hold out.
Yeah. Yeah. I haven't bought SoFi like in a very long time, essentially in the double digits. I haven't bought it. So a cost basis of who cares is something that I don't necessarily agree with. But I do actually think they're good plays. I just find there's so much more to learn right now for me in markets, and it's not. But it is on my mind for sure. But yeah, I really don't like making short-term plays about where stocks are going to go. I have no clue. Black swans happen all the time, and I think like a couple days ago is like the greatest example of how bad things can get in like a flash.
Yeah, sure. I mean, it could definitely go that way. If it was to go that way, you could just roll it out in time, and I could roll it out 3 months from now. The only negative is you're locking up that capital for a longer amount of time. But again, it's not the riskiest thing in the world you can do. Like if I was buying these options saying 17 in a month, then that's way riskier than selling them.
Right. What are your expectations for Tesla earnings as we close the market here in a couple minutes?
I think that Tesla will pump initially after the market closes, I think it's going to jump up a little bit. I think when the actual numbers come out, I wouldn't be surprised if. Well, I mean, with Tesla, it's the call is a really big factor. Because you have to keep in mind that Tesla is a company that they've missed like 5 out of the 6 analyst expectations for 5 out of the last 6 quarters in terms of EPS and in terms of revenue as well. So last quarter they hit EPS, but they missed revenue, and then every other quarter before that they sort of like missed EPS, and then they I think beat revenue like 3 quarters ago, something like that. So it's not like the company has a history of triple beating by any stretch of the imagination, but it is a narrative driven stock. And so the call will be the main thing that people look at to essentially give more details on AI and autonomy. What advancements are they making towards that goal? FSD is going to be a huge focal point, I think, for Elon to talk about. Optimus and the timelines around there, like some updates from that, and just overall the stuff that they've been talking about. That's what's going to move the stock during the call, I think. But the actual earnings results itself, like I wouldn't be surprised if they miss or double miss.
Why isn't this coming up? Okay, there you go. Just as we get into the market close here in the next couple minutes, I'm just tracking these couple stocks. We can also follow the markets as well. So S&P is down right now 0.4%, NASDAQ down 0.46%, and then the 4 really big names, at least the ones that I follow for this earnings date, Tesla, Microsoft, Meta, and ServiceNow, pretty red across the board other than Meta, but we're all going to see a ton of commentary on DeepSeek, on autonomy. This is going to be really big for Tesla. They just showed off a couple new things I thought was pretty interesting today and over the last couple days was these. Did you see the Cybertruck tunnel that they have going from the factory to the main road?
I saw that. That gives me massive claustrophobia. I'm just saying those things are so freaking narrow.
Yeah, but maybe no one's going to be in them because the other news that they showed off today was the cars driving off the lot in full self-driving.
I didn't see that.
That is a cool video. Here, let's bring that up. That's super cool. Well, actually, let's follow the market close. We've got a lot of time to show that off. Well, we'll have the press release as well. So lots of numbers to break down, but it is not going to take us an hour and a half to plug in. But there is some news today as well that I want to show you. Okay, so just going into the close here. Everything is closing right now. Microsoft down 1.09%, Tesla down 2.26%, ServiceNow 2.3%, Meta closing slightly green 0.3% on the day. Who do you think, after everyone reports, is going to be up most today?
Meta, for sure.
Meta?
That's what I think.
It could definitely be ServiceNow. I think that they have I think they have the most to gain from this DeepSeek news, and I think that they are going to be harping on that like crazy.
Yeah.
Like crazy. And Tesla potentially always could have the largest run up, not even based on their numbers, because I don't think that that's going to be too spectacular, but on Elon commentary.
Mm-hmm.
You know, this is something that can just swing the company double digits. And
yeah, I think the implied move for Tesla was like 10% if you looked at the implied volatility on the options markets. So, I mean, we're no stranger to Tesla volatility. It comes baked into the stock. But the call, I think, is where we're going to see the majority of that, as opposed to the actual earnings itself. But we'll see.
Okay, keep an eye out on these numbers if you can.
Do Tesla numbers come out in 15 minutes? Is it 4:15 or 4:30?
I need to check. I don't have it in front of me, though.
Do you see Elon got nominated for a Peace Prize?
Yeah. Nobel Peace Prize.
Insane. That's
fun. For his work in free speech through X.
Yeah.
While we're also doing this, though, let me bring up this Tesla video because this is super freaking cool.
And let me start a little poll here. And the poll is going to be Tesla after hours. It's going to be 420 or it's going to be 320.
Microsoft, massive red candles in the market right now. Here, hold on. Might have some numbers down 5% already. So I think we're getting a first glimpse at the numbers, and then I'm going to try to find them on X, or if they're not on X, then I'll get them right off their website.
Cloud revenue missed 40.9 billion versus 41.1. Sales sales beat 69.6 versus 68.8. EPS beat. Cloud sales missed.
$3.23 versus $3.10 expected.
Yeah, so Microsoft just tanked on cloud. So glad I didn't pick Microsoft. I do think Meta is going to beat, though.
Yeah. Okay, so the first report that we're seeing here, Microsoft missing on, beating on both EPS and revenue, but missing on the cloud numbers, which I actually don't see here yet, but I'll bring it up.
Oh, Tesla red, down 2%.
Okay, and here we go.
Let's take a look at Tesla numbers. I don't think they're out yet, but yeah, we're down 3%. Freaking algos, man. Honestly, like, just wild.
They just see the numbers and trade it based on the initial numbers without seeing anything else. It's kind of fun.
Like a lot of these companies are just like, oh, Microsoft just lost 100 billion in market cap after hours on just algo. You know, like it's just you don't even see the numbers yet.
You don't think they're trading off, initially, like consensus expectations versus what they come in at, or you think they're just trading based on what the stock is trading at, like just compounding the problem?
I mean, have the numbers come out yet? Oh, there we go. Tesla Q4 results: EPS 66 cents, missing 73 cents. Revenue 2.7. Yeah, they missed on both top and bottom line.
That's expected, honestly. I think. Well, at least for the most part, I expected that from their delivery and production numbers were not as strong as what people thought they were going to be. First decline in company history, really, year over year. So, yeah, I don't think that that's unexpected. It's more about commentary about what they're going to say for Optimus, I think, is what full expectations should be around for Tesla. Down 4% here. Microsoft down 3.9%. Meta down 1.9%. And ServiceNow surprisingly just staying flat. They might win just out of survival in this little game we're playing here. But we'll have to see whenever Q4 numbers come out. I'm still on their website here waiting. You going through Tesla's numbers?
Mm-hmm.
Okay, they have the shareholder deck. I'm going to switch over to that now. You can pick that apart with me.
Let's do it.
Okay, do you want to read everything, or are we going straight to the financials? Actually, let's read some highlights.
Let's read the highlights, yeah. Let's take a look, actually.
Okay, $7.1 billion in GAAP operating income. $1.6 billion of that came from Q4. $8.4 billion in non-GAAP net income. $2.6 billion in Q2. Let me bring up my spreadsheet as well. That's going to be needed here.
7.1 billion cash operation. You have a spreadsheet for Tesla as well?
Oh, yeah.
Nice.
Yeah, my spreadsheet is really sizable on Tesla.
Dude, the revenue's been flat for so long for Tesla. It's just really annoying. It just stuck at that like 25 billion mark.
Over 3 billion miles now driven cumulatively on FSD. That just is going straight ballistic now. Straight up, eh?
Mm-hmm. Cybercab in development. It's cool.
Yeah. Okay. Energy, year over year, 113%. Services up 31%. Gross margin, 16.3%. That's definitely lower than what I would have expected.
Wait, what is it?
Total GAAP gross margin, 16.3%.
Yeah.
Adjusted EBITDA margin, 19.1%. Interesting. Let's see if they have any commentary here.
Energy still looks to be good.
Yeah, no, that looks amazing. A subsequent increase in their cash as well, which I actually don't find you're seeing from a lot of the Mag 7s. They're usually just pouring that into other investments right now. Tesla right now down in the markets 4%, Microsoft down 3.7%, Meta down 0.7%, and ServiceNow leading the way at 0.3% negative. But it is people have a lot of tension right now after all this problems in markets. Shaky markets make numbers have to be amazing for people to.
Average cost of goods sold per vehicle, all-time low. That's a really cool chart.
Let's see this.
I'll post that. Hold on. Oh, you have the deck in dark mode.
Oh, sorry. Is that bad?
Yeah, that's probably better for people to see.
I sit with 4 monitors in front of me staring at them at all times, so I got to make sure I'm in dark mode so I don't destroy my eyes. Energy storage deployment in Q4, man, it's crazy. I've already seen those numbers because we already had it, but it's still mind-blowing to see.
Oh man, I feel like we're going to be having more than enough content to talk about this deck for an hour. It's there's a lot of stuff in here. The Cybertruck advancements, new Model Y, semi-factory.
Wait, what is this saying?
It's
Is this just versus their other vehicles?
Yeah, I think this is just going through like their iterations that like what's new basically in their architecture.
Bro, ServiceNow numbers just released. I haven't even seen them yet. I gotta check X, but they massive red candle right now.
Uh-oh. What's Meta? Meta's green, I guarantee you.
Meta's down 1%. Microsoft 3.7% down. Tesla 3.3% down. ServiceNow looking like it's down 6%, 5.7%.
I'm winning by default.
Yeah. It's the least bad.
Ooh, they took a picture of their 50K GPU training cluster, which they were talking about in the report as well in the highlights.
Sorry, I'm in completely other different pages right now.
Yeah. It's coming back. Tesla's coming back.
Showing off the new refreshes here. Wow, they even got the Model Y refresh here already?
Yeah, pretty cool. Vehicle deliveries.
Yeah, this is the new Mega Factory Shanghai. $50,000 GPU training cluster that is of no use anymore. Bad investment. I'm kidding. But still fun. Yeah, I mean, I think this is what people expected. Dude, ServiceNow down 12%.
Wow. I am so shocked. Why do you like, I don't know, man. I don't know why you hold 100 stocks in your portfolio. Like, I don't know why you're running an ETF.
I only have 18 names. ServiceNow is one of the best growth stories in the entire stock market.
Time to buy some more, I guess.
Here, look at this real quick while I sink into my chair. Look at ServiceNow. You don't like this company? What part of this do you not like? You don't like making money?
I mean, that's like all the major companies, bro. Like, go.
I know, but all
like,
those major companies have been great investments. You don't always need to find the Lucids of the world to make money. You just need to buy great companies.
I'm just saying. Reports Q4 EPS 3.67 versus consensus 3.66. So they beat on bottom line. They miss total revenue plus 21% year over year for ServiceNow. I'm saying,
Yeah,
$3 billion share repurchase program, Tannor.
that's fun. Well, at least they're just giving them away to buy more shares. I don't see how ServiceNow is not. Well, all of the cloud providers and agents of record are all the largest benefactors of AI agents getting cheaper. And I think that is something that might not be realized in markets, but will be realized over time, is they have nothing but to gain from those tools end up getting better. And I know Chamath has been kind of anti that. He thinks that these companies, if AI agents or just AI in general, I shouldn't say AI agents all the time, it just gets caught up. But if AI gets to a point where it's so good that these companies are going to make internal agents of record, bullshit. I don't believe that at all.
Yeah.
I think that ServiceNow and Salesforce will just be so much better at delivering the services that they offer that they will even be more cost effective than what people can make internally. All right.
Bro, it's insane. TSLL, I'm so glad that I got out of that because it's really good for a trade. But I remember being really sad because this thing hit like $40 or close to it, and now it's back down to 24. It's just the drops are so much more brutal than the rise ups because it's 2x leveraged. I sold SMCI. 16% returns in 1 month. That's amazing.
What did you think about this whenever you heard about the fleet of Cybertrucks equipped with Starlink in Los Angeles?
I didn't really think much of it. I thought it was more like a marketing publicity thing.
Yeah, but did you see that as a sign of weak demand for Cybertrucks? That
Why?
they can just deploy a ton and no one was complaining online about their delayed Cybertrucks? I think there was like a couple posts, but
yeah, I mean, two things. Number one, Elon tweeted about that, saying we're sorry to people who are waiting for a Cybertruck this week. You're gonna have to wait like another week. And then the second thing, so like there were delays. It wasn't like they were just sitting on the lot. And then the second thing is that like these people have been waiting for a Cybertruck for like 3 years on the wait list. Like, what's one more week?
yeah, but you then like, I don't know. It'd be very hard to go and take those same vehicles and then deliver those vehicles with potential smoke, damage. Like I don't know. That like you're receiving your brand new car and it's been used in
Yeah, I mean, did he
like a
have to
fire
make it
escape?
with Cybertrucks? Then not really. That's why I think it was a marketing. Like, I think the awareness and the publicity around Cybertruck is probably more than the 10 pissed off people that have a little bit of dirt on their trucks.
Here, can you share this report real quick?
What report?
Just Tesla, whatever you're looking at. I just need to plug some numbers and I don't want it to be boring on the screen.
Okay.
I'm trying to do that, but realizing I can't do both at the same time.
Yeah, gotcha. Okay, cool. So let's take a look. Let's go here. AI trading. I feel like they're going to talk a lot about the AI trading compute. Over 400% in increase in trading compute in 2024. Over 3 billion miles driven on FSD supervised as of January. Yeah, and they highlight here that the active driver supervision is required. This does not make the vehicle autonomous. completed construction of Mega Factory Shanghai. The stock is down currently 3.3%. IBM is up 10%. Somebody is saying, I don't know why that's the case. IBM, that's like a dark horse pick to be up 10%, but okay. 2025 will be a seminal year in Tesla's history as full self-driving supervised, they keep highlighting the supervised, continues to rapidly improve with the aim of ultimately exceeding human levels of safety. This will eventually unlock unsupervised full self-driving option for our customers and the robotaxi business, which we expect to begin launching later this year in parts of the US. So robotaxi business later this year. I kind of want to tweet that out. Let me put you guys here, and then you can't see this. And I will just post. So I'll take a screenshot of that. I think they've talked about that before, but
yeah,
I'm just going to post that out.
Maybe not officially, maybe just in the aspects of the Cybercab day, they brought that up. But still, they said this will be rolling out into states like Texas and certain parts of California in 2025, and then try to broaden out from there in 26.
Yep. In parts of the US. Just a second. In their Q4 presentation. Okay, let's continue. We also continue to work on launching full self-driving supervised in Europe and in China in 2025. That's cool. All right. Let's see. What else? Affordability remains top of mind for customers. Yeah, I absolutely loved that cost of goods sold because, again, guys, like the lower the cost of goods sold drops, the better that is for the overall margins. And I know that they're raising prices and lowering prices, and they're so sensitive to the price adjustments. But on a whole, the more that this number goes down, the more flexibility they have to maneuver around that situation with regards to what it actually costs them to produce a vehicle. So somebody says, don't buy Tesla, buy BYD. Okay, cool. I'm going to go right ahead and do that. With the advancements in vehicle autonomy and the introduction of new products, we expect the vehicle business to return to growth in 2025. The rate of growth will depend on a variety of factors, including the rate of acceleration of our autonomy efforts, production ramp at our factories, and the broader macroeconomic environment. We expect energy storage deployments to grow at least 50% year over year in 2025.
Cool. Say that one more time.
They expect energy storage to grow at least 50% in 2025.
Yeah, I hope so.
Plans for new vehicles, including more affordable models, remain on track for start of production in the first half of 2025. These vehicles will utilize aspects of our next generation platform, as well as aspects of our current platforms, and will be produced on the same manufacturing lines as our current vehicle lineup. Does everybody love the fact that I'm narrating the Q4 earnings deck? I should be reading audiobooks with a voice as silky smooth as this. For more ASMR, like and subscribe to the channel. This approach will result in achieving less cost reduction than previously expected, but enables us to prudently grow our vehicle volumes in a more CapEx efficient manner during uncertain times. This should help us fully utilize our current expected maximum capacity of close to 3 million vehicles, enabling more than 60% growth over 2024 production before investing in new manufacturing lines. This is pretty big. So they're going to increase their capacity by quite a bit. Okay, let's take a look. All of these advancements in the Cybertruck that we're seeing here, like, they're going to make it more efficient. They're going to make it more cost effective. They're going to make it more compelling of a product offering. And more importantly, they're going to make it more scalable from a production point of view. But not only that, they're going to probably make it across multiple vehicle lineups, because every single one of these line items in this chart is a learning that the business has that they can then take and use in new upcoming models that haven't been introduced yet. So you've got to keep this in mind as well, that this company is innovating in their own way. And the best, I think, example of this is if you look at teardowns of old models versus newer models, you'll see the massive changes in terms of the architecture and the nuts and bolts of every single decision that they've made in the production of these vehicles. And so here, I mean, they have it broken down really nicely, right? Manufacturing and design, powertrain and architecture, and then all the way down to ride and comfort. So that user experience of the Cybertruck specifically. This is going to be the same in the refreshed Model Ys. This is going to be the same in the newer, lower cost models. This is going to be the same in that Cyber Cab. All of these learnings are going to be translated. You can see here, use in future vehicles. So like all of this stuff, they might have done this exercise for the Cybertruck, but they're going to keep those learnings moving forward. And that's how they improve the cost of goods sold, which you can see here. That's how they improve the rate of production, which we talked about here. And that's essentially how you can see the advancement in the innovation this company is bringing to the table. I don't love that the numbers are essentially stuck at 25 billion for revenue and that they're kind of stagnant in terms of growing. I think Apple is facing similar issues, being a hardware software hybrid mix. They're also stuck somewhat in their revenue and trying to essentially break through to a new range. But, it's going to be interesting to see in the call when analysts ask these questions around new vehicle lineups. And actually, let me go on to Say Technologies and take a look at what the main questions are. So give me just 1 second. So Tesla.
Well, he brings that up, though. I think, Apple and Tesla is, and I know that you don't even believe this. I think you're a shareholder of one and not the other. But
Correct.
That's a crazy comparison. Tesla is biding time until Optimus, full self-driving, and all the vehicles that are sold today will turn on like switches, obviously, that are amazing revenue streams. And you're going to see those automotive sales revenues potentially go down or stay flat, and the services and other category skyrocket.
So I'm not saying that Tesla is like Apple. I'm just saying, like, in terms of how the story will play out for them, I'm just saying that they're both hardware, software mixed companies. And the market really is viewing Tesla on a strictly production point of view in terms of how much hardware can they produce, how fast, and what are the margins on that. And the software aspect is like a Trojan horse with every car that people buy. Let me flip now into the actual questions. And then I think some of these are going to be interesting to read while Tannor keeps plugging away at his stupid spreadsheet because he's a nerd. Okay.
I'll bring on a lot of good content here in a second.
Tesla just turned green in after hours, big green candles. And here we have some of the biggest questions. You have them grouped in terms of the category. It just defaulted to this Elon Musk category. And look at the first question. Jonathan asks, how is having a position in the White House going to affect the time spent with Tesla? So I can see Elon throwing a fit at this question already. It's like similar questions. How much time does Elon Musk intend to spend at the White House and on government activities versus time to Tesla? What is the sales loss due to political activities of Elon? They brought this up, which I don't even know if I can say on YouTube.
Don't even worry about that.
There's quite a bit. Let's see the FSD questions. Tesla is going up. It's now up 1.5%, 1.6%. I don't know why it's climbing up. I'm just going to check my Twitter feed for just a second because there's probably something here.
There's a couple things. Tesla revealed none of their $1.2 billion in Bitcoin was sold in Q4.
Oh, that's exciting.
Tesla Energy is just still pouring out unbelievable growth. Storage deployment hit a record 11 gigawatts an hour, up 244% year over year.
Yeah. So
Tesla says plans for new vehicles include more affordable models. This is what's also
Where are you seeing this?
What?
You're just seeing this on Twitter?
Yeah.
Okay. So let's just go through some of the questions. Tannor can finish his chart, and then we'll talk about why the stock is ripping up 2.8% now. So we're looking good.
I'm gonna steal the thing from you real quick.
Yep.
This is what Tesla's doing right now. Microsoft also seeing a little bit of recovery on their red candles. Meta down 2.29%, but recovered. And ServiceNow, boy, oh boy, was that the wrong call. This is why I don't do short-term investing. This is why the longer-term picture matters, because I'm no good at that.
Didn't you say ServiceNow was going to be the highest one of this list?
Yeah, that's why I don't do this.
What you get. It's what you get.
Yeah. But I benefit from holding all those companies long term.
Okay, let's take a look. Yeah, top voted questions are all around. Actually, let me take this off altogether.
Your screen is being shared right now.
Okay. Yeah, so top voted across all categories seems to be around FSD, but let me also see most shares because that's, I think, how they're going to ask it. Is unsupervised FSD still planned to be released in Texas and California this year, which I think they said in the earnings release. Wow, plus 4.5% on Tesla in after hours, guys. Still climbing, just massive green candles all the way through. Any other discussions with licensing FSD? Is Optimus now mostly designed locked for 2025 production? Mostly designed locked. Dude, if you're going to have 2.4 million Tesla shares that are voting on this question, can you just make sure it's grammatically correct? Because I don't know. But then again, you have 2.4 million shares.
A better written one there?
Yeah, exactly. Elon has said publicly that long-term shareholders of Tesla will have the ability to invest in his other companies. Could you provide some clarity, color as to what that looks like? Brokerage firms use FIFO. What is it? First in, first out. So anyone who trades won't have the true length of time as investor. KKK. When will Tesla start selling Optimus and the price? Is there a new affordable Tesla model coming soon? Yeah, these are all questions that I want to know the answer to. So we'll see what they say. Has Tesla given up on ramping their solar roof product? Savage.
Yeah, well, they just simply stopped showing the numbers now over the last 4 quarters. They just simply stopped.
Which Tesla products will be used to assist in the colonization of Mars? I think this is a kind of a dumb question. Ask this to Elon in a podcast or a Twitter Spaces.
Yeah, but the answer is Cybertruck.
All of them. Seriously, it's like Cybertruck, Boring Company, Grok.
Yeah, solar. Well, Tesla products.
Yeah, I guess.
Not Elon products, but yeah, there will be some solar there, some energy storage, some Cybertruck.
Dude, Tesla just needs to buy all the other Elon companies and just do a Google conglomerate type of thing,
Yeah. What's
totally
crazy is I mean, obviously there would be benefits to selling to yourself, but be hard to even afford SpaceX at some of the premiums that they're selling at, which is crazy.
No, but you can start a conglomerate called X and have SpaceX, XAI, X as in Twitter, Tesla, and just have an Elon index that's all publicly traded. That would be cool.
Yeah.
But then again, he wouldn't want to do that because he's putting all his companies at the whims of public shareholders. That's why SpaceX is not private, because he doesn't need the money and he doesn't need the headache. So it sort of makes sense to me.
Yeah, exactly. Why has he done it once and not again? Wonder what he's realized he doesn't freaking like doing that.
Yeah, and I mean, I think the first time he did it is because he didn't really have he needed to do it. He didn't really have the money. He didn't really have the optionality, and now he's the world's richest guy. He doesn't really need to do anything.
Yeah, exactly.
So this is the stock price that we're taking a look at right now. Slight pullback, but again, like we said earlier, the call is going to tell the story here of whether we go up or whether we go down tomorrow. Anything could happen on the call. This thing could be up 15%. It can be down 10% based on how that call goes. So we will see. It is currently 4:30. Let me just check on YouTube and let me see when the earnings call is scheduled for. This is fun. Oh, Rob's doing a Tesla Q4. He has 7,000 people watching.
Who?
Rob Maurer,
Oh, sorry.
as in Tesla Daily, the guy whose pod
Yeah,
is.
yeah, no, yeah.
Let's see. Yeah, so it's scheduled for 5:30 p.m. Eastern. So the call is in 1 hour from now. So stay tuned. We will be covering the call live along with some commentary and some thoughts. It's going to be a fun time. This is going to be a long stream between Tannor and myself. So
We could
yeah,
also
grab.
at 5 o'clock, if you're interested in listening to an earlier call for a little bit, like hearing what the initial thoughts of Meta are, for example, we could listen into that for a little bit. I'd be interested in
Yeah,
that.
yeah, I'd like to listen to that.
Hear some deep seat commentary before we jump into Tesla, and then right around 5 o'clock we can just switch over, or 5:30 we can
Yeah.
switch over.
I'd rather listen to Meta than Microsoft or ServiceNow, to be honest with you. Let me
Yeah,
see
no,
who else.
I think I'm not going off what I want to listen to. I'm going off what I think would be the most interesting. I actually don't think retail investors care that much about Microsoft. I think a lot of them just think of it as boring.
Yeah. How did ASML do this morning?
I didn't follow.
Huh.
I can bring it up.
I'm sure if somebody has the answer, they'll throw it up. But yeah, man, let's throw up the
Positively.
Facebook. Oh, did it good?
Yeah, kind of just made DeepSeek look like a just a quick flash here. If you take away the the time off the trading days. But sorry, Tesla up 3.7% right now. Microsoft down 1.7%. Meta also flipped positive, and ServiceNow down 9.1%. I'm gonna have to go through those numbers. I haven't even looked at them yet. So
I think Bernie brings up an interesting point, saying, Elon's the richest guy in the world, but he's kind of the most hated prick in the country. Is it really sustainable to be hated and running a car company? Really think Tesla is dead. I mean, look, man, do you agree with every single CEO of all the stocks that are in your portfolio? Do you like, I don't know, man. Like, I still listen to music for people who have done stupid or offside shit. I still watch movies for people who have
I
done
think I
stupid
know
offside.
exactly who you're
You know what I'm saying? Like, I can separate the product from the actual creator of the product. And that same thing goes for CEO. It's like if they were all super altruistic, perfect human beings that I agreed perfect, like that doesn't necessarily correlate with me making money. I'm here to make money. And the Tesla product is a dominant, superior product, regardless of what Elon as a person thinks or does or says. Of course, like there is a happy medium towards that. Like I'm not happy as a Tesla investor um, with a lot of the stuff that he's saying, or like, and that you can see from me bringing up the questions that the biggest questions are like, how much of your time and effort and energy is going to get diverted from Tesla to other pursuits. I believe that when he bought Twitter, I believe that now with politics. So I'm totally in agreement with you. But what I'm saying is, just because he says stupid shit from time to time doesn't mean that Tesla's a bad product or that the cars are all of a sudden unsellable. Like they're one of the most popular products in the world. And
You do
at
see
the end of the
though,
day, yeah,
from those popular stickers that people put on their cars of like, hey, I bought this before whatever Elon did, that people do make political choices with their, products. And I try to as well. Like I want to support the companies that I'm in favor of their movement. But I do agree with you on some stances. I think that artist that potentially you were talking about was like the top artist of my year, and I don't care about a lot of the things that that person has said. If you're talking about the same person that I'm talking about.
I am talking about the same person, but like it's crazy. Like, and don't bring up Bernie's other comment because YouTube doesn't like that word. But
Yeah.
it's like that meme with that guy sweating to press the two red buttons, because on one hand, like you could very like deeply disagree with Elon's stance and his personality and his belief system. On the other hand, it's the number one EV company in the world. And so you have people who want to be green friendly, who want to be environmentally, conscious. They're not going to go buy a Neo. They're not really and plus not a lot of those cars are so commercially available in Europe or North America. And so they're stuck with very few options if they want to, do that, or even if they want a virtue signal that they want to do that. So, I mean, he does run an EV company at the end of the world, and that message alone, producing more vehicles, that's a positive thing that I think, I can agree on, regardless of what his own personal stance is or his own personal politics. That's just me. Again, I'm not being like an Elon apologist. I'm just trying to present the devil's advocate view.
Yeah. Just finishing up the last little numbers here, because it proved to be a little bit trickier considering I'm doing both quarterly and annually, and they don't show the annual numbers on a lot of them. So we're getting a little creative here.
Yeah. And then we're going to jump into the meta call, everybody. Let me turn on this market close, meta call, and Tesla earnings results.
What are you changing your title?
Yeah, I just adjusted my title for the meta call. I'm not as good as Amit or some of these other YouTubers at doing this stuff on the fly. Like, I don't have timestamps on the fly or anything like that, but I'm mentally preparing myself for a long haul because we're already 51 minutes into this thing and we're not even at the main course.
Well, to be fair, it's felt like 15. So
yeah.
But that's actually why I usually don't do the like market stream closes and stuff, just because I find them so unbelievably long. But whenever you have news like this and it's just dropping like crazy, it just keeps me fully busy the whole time, and I really do like it. But yeah, did we see any headcount news here? What's the headcount? Did they say? They must. It's just whether it is in the 10K or if it's in the press release. On an annualized basis, though, Tesla does release that number.
No, there's nothing.
All right. Well, I have most numbers.
What was your head count as of the last quarter?
140,473 of end of 2023.
You got to write down to the person, hey?
Well, yeah, I'm just copying the number.
Yeah, I guess. Insane.
Okay, let's go through. Actually, hold on. Hold on here.
Donald says, why does Tannor always look like he's in disguise?
It's the big nose, mustache, and glasses combo.
Very kind of you, Tevis, to allow Tannor to market his endeavors on your channel. Hope he's throwing you a bone for allowing him to do so. Yeah, Tannor, where's my cut for all the people that sign up to your stupid Discord, bro?
The QR code is cut off. They can't join. And you're more welcome. You're able to join the Discord as well.
I'm not going to join that shit.
We welcome everyone. Okay, let's go ahead and flip on over to this real quick. I have so many freaking pages open right now. Tesla. All right. So
zoom.
Yeah.
Zoom.
Zoom.
Okay.
So
he did a Roman imperial salute. I love that.
This is and then we don't have a lot of time, but sort of what we are seeing in Tesla over the last year. And then you could break this down across the different sectors that they show off, and the plugged numbers you can see here by where I have these stamps. So that's the stuff that we add, and then everything else gets auto-filled. So total automotive revenue, we can see that and how that sort of decreased a little bit. And then you can see the difference in energy storage, just how much this has freaking grown over the last little bit. And you can kind of plug this out over a little bit. Like, this has been flat for a real while, where everyone kind of wrote this off for a little bit as it stayed flat for many quarters, and then just recently just started exploding. And And
have
and
any
you can even see
charted
this
out?
on an annualized basis. So let's go.
Do you have any
Uh,
of these on like a graph, Tanner?
yep.
Visual? Yeah. Let's
So
see.
net income, or sorry, net revenue. This is where people are just a little bit disappointed in its growth because it's the first time that it's really stayed flat.
Yeah.
Uh, net income doesn't look. Is that real? Yeah. No, that can't be real. Is that really what happened? Yeah. Oh wow. Okay. Um, and then you can see the net income margin there, free cash flow, the different breakdowns of the different services. So we have automotive, energy, and services and other. I think services and other, although it's going to get beat right now by energy because energy is just skyrocketing, this is the one to focus on in Tesla over the long term as a potentially, FSD might end up making a F ton. Their overall gross profit margin and cost of revenue on an annualized basis, EPS, the different operating expenses over time broken down. A little bit of restructuring add here, so that's not much and won't be continuous going forward.
Dude, Meta just
Employee headcount's wrong. This is probably showing, revenue per employee. I just need to fix this, but
Facebook just continues to kill it, man. I'm just looking at their numbers right now. Holy.
so this headcount is probably wrong. I probably need to adjust this. They probably added a lot more, but I just haven't found the number yet. And these are probably all broken as well. So don't look at these. What's going wrong here? Oh, year-over-year change.
Tesla now has 7,000 supercharger stations worldwide and over 65,500 supercharger stalls. Cool. Cybercab lines are going to be prepared for volume production at Gigafactory, Texas in 2026. Cool.
Yeah, the PEG ratio is completely off, but I'll just need to rebuild it. But this is what current estimates are, and then you'll see the estimates change drastically for Tesla going forward. But yeah, as I keep breaking this down, I'll show you a couple different pages here. But first time ever where automotive has only made up for 77% of overall revenue. Sales and other make up for 11%. Energy storage made up for 11.9%. So most of the time over the last years and years and years, those have all been single digits. And now they're both double digit percentages. Very interesting. One of the stats that I like the most whenever looking at Tesla is just the Tesla locations.
Mm-hmm.
Tesla locations, just because that's some of the biggest thing, like the supercharger stations are some of the things that whenever I hear I should say supercharger stations just in general. But whenever I hear people's skepticism of wanting to buy a Tesla, it's always that there's not enough chargers, or that those chargers, whenever you do go there, are broken or something like this, or not fast enough. And so as they roll out, more Gen 4 chargers and at more locations, this will hopefully increase the total adoption of Teslas in general. Bear with me here. Any thoughts?
No, I'm just I'm ready to hear the call. I'm ready to hear some of their explanation around these numbers. I mean, a lot of the stuff that we talked about on the actual report, like the stuff that I was reading out while you were plugging in your numbers, I think they're going to reiterate a lot of that on the call. And I'm just most looking forward to the questions from analysts and more importantly, the questions from retail. because I think that's going to provide a lot of light in terms of where they're going. And this company, I mean, doesn't really trade on where it is. It just trades on very much narrative and very much where it's going. So we need a lot of that, right? Like a lot of eyes on FSD, a lot of eyes on AI and the trading compute, a lot of eyes on Optimus. And just overall, I hope they address that, because like this 3.5% that we're seeing after hours, like that's nothing when the actual call starts and they actually start shedding some light on these things.
Jim Cramer's talking shit on X right now.
About what?
He said, okay, right now the nitwits who went against us on Microsoft and Tesla are already dying.
Shut up, Jim.
Bro, that is so funny to throw shade on. And by the way, Microsoft's down right now.
Or
but
up, Jim. Stop.
that is so funny that he's like, by the way, everyone was wrong. Like, bro, you are the last person to throw, shade around based on your trade history. Too funny.
Fucking Jim Cramer, man. I swear. You want to listen to the meta call for a little bit?
Yes, I do. Is that at 5? I assume it's at 5. I hope it didn't start at like 4:30.
I'm not sure. If anybody in the chat knows when the meta call is, let us know.
Yeah, it's at 5. Can I go change out of this hoodie? Because I'm dying now.
Yeah, sure. No problem.
You hold up the fort.
Yeah.
You want to share your screen so then you can plug around?
No, you can just go
Okay.
split screen and then go off camera. Or that. Yeah, sure, Tannor. You can stay like that too. Anyways.
What do you want?
No, you're fine. You're fine. You're fine.
You want this?
Don't do that. All right. Whatever. Just go. The worst. Why do I do live streams with this guy? Honestly, I am now a spokesperson for the Future Investing Discord. Everybody buy my course, so you can get access to my very cool 1999 Excel charts. Because software doesn't exist to actually visualize stocks. It's all done on Excel. You got to wait for me to plug my numbers in for 30 minutes when the earnings come out. Because I'm Tannor, everybody. This is who you are subscribing to. Everybody who's following Tannor right now should unsubscribe, because this is just, it's ridiculous at this point. The man owns Lending Club. The man owns ServiceNow. And you can see the performance in those two stocks over the last couple of days. He talks about Shift 4. He talks about all of these random obscure fintech companies. Meanwhile, you have Tevis over here, who's buying HIMS at $13, who's holding SoFi for years, who's been holding Tesla for 5 years. And this is the guy you subscribe to? Excel boy? Course boy? Tannor? Future investing? Okay, he's back. What's up, Tannor?
Hey, guys.
I just went on like a 3-minute on no pause rant about you. So
no, my room's right there. I heard the whole thing.
Good. I wanted you here.
Yeah. Let's get into Meta. Shall we? Now, I don't follow Meta very closely. Obviously, they're a big name, but I don't actually own them, nor do I hold Microsoft. But we can take a look at some of these numbers. Yeah, holy crap, man. Meta just kills it every time. Revenue up 21. Here, wait, let's switch over to Meta while we're talking about this.
Yeah, they're great.
Revenue up 21% year over year. Well, their expenses went up only 5%. Income from operations went up 43%. The margin went from 41 to 48%.
You want to actually share your screen?
No. And their change in net income went up essentially 50%. I'll share my screen. Just crazy. Just crazy. And it even looks even better if you look on an annualized basis. But really not much to go off here. Yeah. Daily active people. I like that. Daily active users was 3.35 billion on average, an increase of 5% year over year.
Of course, they call it DAP. Daily active.
Yeah.
Oh, jeez, man. What's wrong with users? Is users like what's wrong with users now?
I think they're trying to, like, it even says family daily active. Like, I don't know.
And I'm sorry for swearing, but what the fuck is a daily active person? Somebody who's just alive today, I guess, who just woke up and they're here on this planet. That's a daily active like, what is a daily active person? A user is somebody who uses their app. That has sense. It's they are a user of that app. A daily active person is just somebody who's alive.
Have you set like a person to be your because these social media companies have been around so long now that like a lot of their users have died since signing up. And so not like I don't mean like a large percentage, but I mean like they've had probably millions of users that have passed away. But what happens to their accounts whenever people pass away? And now they have features in Facebook where you can set someone that's going to be able to take over your account after you pass. Have you set that up yet?
I don't have a Facebook and I turned off my Instagram. So, and I don't think anybody wants to inherit my stupid Twitter account after I die, bro. So I think I'm good.
I don't think it's about inheriting. I think it's more just like taking over to tell everyone that you've passed or something, or deactivate the account or.
Yes, somebody donate. Buying Celsius donated for my toxicity against Tannor. Yes, this is what we need. More of this on this channel.
I came into his chat the other day and I said, "Hey guys, just here to support the algorithm." And they were just like, "Hey, don't go subscribe to that guy. That guy's crap." And I was like, "All right, hope you guys get." There needs to be more love in these guys' life.
I have trained my chat to dislike Tannor.
It's all right.
Tannor's.
Sorry, go ahead.
I was just reading one of the comments.
Look at these charts on Meta, man. Sorry, I've just been staring at them. Advertising revenue per user.
Not per person?
No. Sorry. Yeah, per person geography. By people geography.
Inconsistencies now.
By people geography, you see how much US and Canada has grown. This is mainly based on, advertising revenue that's made on holiday spend. Like as Tevis has probably seen, having a YouTube channel as well, it's much, much higher in December and November than any other month for advertising revenue, because all these companies want your holiday spend. So they ramp expenses as well. But
bro, I make like $300 a month off YouTube. I don't know what you're saying.
Yeah, but maybe for you, it went from like 250 to 300.
My daily active people is not that high.
Okay, you need more daily active people. Where can I get a market cap, Tannor? Ooh, from Robinhood, ladies and gentlemen. I actually don't know if they're for sale, if they have like Robinhood merch, but I love that hat.
Didn't they just roll out a new product today? They rolled out
features have been slowly rolling out, but yeah, they rolled out features today for a larger base, and they'll continue to roll it out. But
did you buy more Lending Club today, or are you too shy to admit it?
Dude, I don't know. I guess you've never seen any of my videos. All I do is talk crap on Lending Club. Like, I've never been positive on Lending Club once.
Are you a fan of the David Chiaverini trade to short SoFi and long LC?
Yes. If it's David Chiaverini and his followers that are buying that, then yes, I'm a fan. Keep going. But I don't suggest anyone in these chats do that. No.
Yeah. All right. Meta call is going to start in just a few minutes. I don't know why my camera's flickering, but
bro, this was 2 years ago. $4.6 billion, now making 20.8 billion in net income.
Insanity.
Insane margin expansion, insane amount of ability to continue to deliver, all while people back in 2022 were saying that Meta was a dead business. And that also didn't come at the cost of large dilution. $1.76 EPS up to $8.02 of EPS.
I mean, look, man, all credit to Zuck because he listened and he actually turned it around. People were saying, why are you investing so much money into this metaverse that has such a long, payout period? This is stupid. You're not making money. And then he just started firing a bunch of people and started focusing on investors,
It was literally, what's his name?
Yeah, it was Gerstner.
Yeah, Brad Gerstner.
Yeah.
From Altimeter Capital that just said, hey, guys, you need to straighten your crap up. And they're like, all right. And then just dominated past the next 2 years. Yeah. Daily active people.
Can you go to this? Hold on. Go up. I want to read the fine print. Go up a little bit.
Man, they really do have a thing against user, eh?
Dude,
like ARPU is a pretty common.
ARP. I want to go to the fine print. Stop.
What do you want?
Right down there at the bottom. We define a daily active person as a registered and logged in user of Facebook, Instagram, Messenger, and or WhatsApp. Collectively, our family of products. So basically, it's anybody who has logged into any of their products.
Yeah, no, it's extremely biased in my opinion, because there's some times where I have Facebook on my phone and I'll get a ping, I'll click on it and then immediately close the app. And I've been on there for 0.3 seconds and I know that they look at me as a daily active user. You're
a person, all right.
I am not a daily active user of Facebook. I mean, I use Messenger from time to time. There are some people that message me exclusively through Messenger, but yeah. My dad has been calling me all day. He wants help with his internet speed. Do you still do this with your parents? You help them technologically all the time?
Yeah, I do. I think everybody does, dude.
Yeah, it's just it's a struggle. And you know what's so funny is I can't imagine myself being that person as I get older, but I probably will be. And I don't know when that happens. And I look to Snapchat being a large competitor of Facebook, and I'm like, I don't know how people use this app. I tried using it one time, and I'm like, I don't even know what these buttons mean. Like the icons are different than ever. Like I feel like in technology we've sort of set some standards for icons of like, oh, this is the settings button, this is a menu button. Snapchat just does their own thing. They'll throw a ghost up there, and they're like, how did you not know that was your past messages button? And I actually wish bad things upon Snapchat's stock. I don't know how that company continues to survive, and yet they continue to grow. But I don't know who's using it.
Your poor viewers. Some of them are Snapchat holders, and you're just hoping that they get poor.
No, I'm saying you guys. I won't tell you guys ever what to do, but sell your stock. Meta earnings are about to start here. I got the earnings call up. We're just listening to music. Don't worry, we're not going to miss it. And then in 30 minutes, okay, we are going to transition from Meta to Tesla. So don't go away. We'll be right back with these messages. Dr. Phil coming right back at you. Yeah, I'm still listening. I was hoping it was going to transition right from the Dr. Phil joke into earnings, but now we're just sitting here. We're just sitting in it.
It's so awkward whenever you make a joke because it's only the two of us here, and there could be people like, over 100 people here. Somebody would be laughing at that joke, but if none of us on the stream laugh, it just falls so flat. It looks so stupid. We have that all the time on SoFi Weekly. Somebody makes a joke and it's just like silence for 4 seconds, and then they're like, "Okay, next topic."
Well, you know what I like about Thank you, Angelica. Oh my gosh, we needed that.
She's just being nice, bro.
No.
Nobody.
Okay, Meta's starting. Let's switch over.
I was laughing. It felt awkward. Random Samaritan.
To the Meta fourth quarter and full year 2024 earnings conference call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question, please press star 1 on your telephone keypad. To withdraw your question, again, press star 1. And we ask that you limit yourself to one question. And this call will be recorded. Thank you very much. Kenneth Dorell, Meta's Director of Investor Relations, you may begin.
Thank you. Good afternoon and welcome to Meta Platforms' fourth quarter and full year 2024 earnings conference call. Joining me today to discuss our results are Mark Zuckerberg, CEO, and Susan Li, CFO. Before we get started, I would like to take this opportunity to remind you that our remarks today will include forward-looking statements. Actual results may differ materially from those contemplated by these forward-looking statements. Factors that could cause these results to differ materially are set forth in today's earnings press release and in our quarterly report on Form 10-Q filed with the SEC. Any forward-looking statements that we make on this call are based on assumptions as of today, and we undertake no obligation to update these statements as a result of new information or future events. During this call, we will present both GAAP and certain non-GAAP financial measures. A reconciliation of GAAP to non-GAAP measures is included in today's earnings press release. The earnings press release and an accompanying investor presentation are available on our website at investor.atmeta.com. And now I'd like to turn the call over to Mark.
All right, thanks, Ken. Thanks, everyone, for joining today. We ended 2024 on a strong note with now more than 3.3 billion people using at least one of our apps each day. This is going to be a really big year. I know it always feels like every year is a big year, but more than usual, it feels like the trajectory for most of our long-term initiatives is going to be a lot clearer by the end of this year. So I keep telling our teams that this is going to be intense because we have about 48 weeks to get on the trajectory that we want to be on. In AI, I expect that this is going to be the year when a highly intelligent and personalized AI assistant reaches more than 1 billion people, and I expect Meta AI to be that leading AI assistant. Meta AI is already used by more people than any other assistant, and once a service reaches that kind of scale, it usually develops a durable long-term advantage. We have a really exciting roadmap for this year with a unique vision focused on personalization. We believe that people don't all want to use the same AI. People want their AI to be personalized to their context, their interests, their personality, their culture, and how they think about the world. I don't think that there's just going to be one big AI that everyone uses that does the same thing. People are going to get to choose how their AI works and what it looks like for them. I continue to think that this is going to be one of the most transformative products that we've made, and we have some fun surprises that I think people are going to like this year. I think this will very well be the year when Llama and open source become the most advanced and widely used AI models as well. Llama 4 is making great progress in training. Llama 4 Mini is done with pre-training, and our reasoning models and larger model are looking good too. Our goal with Llama 3 was to make open source competitive with closed models, and our goal for Llama 4 is to lead. Llama 4 will be natively multimodal. It's an omni model, and it will have agentic capabilities. So it's going to be novel, and it's going to unlock a lot of new use cases. And I'm looking forward to sharing more of our plan for the year on that over the next couple of months. I also expect that 2025 will be the year when it becomes possible to build an AI engineering agent that has coding and problem-solving abilities of around a good mid-level engineer. And this is going to be a profound milestone and potentially one of the most important innovations in history, as well as over time, potentially a very large market. Whichever company builds this first, I think is going to have a meaningful advantage in deploying it to advance their AI research and shape the field. So that's another reason why I think that this year is going to set the course for the future. Our Ray-Ban Meta AI glasses are a real hit. And this will be the year when we understand the trajectory for AI glasses as a category. Many breakout products in the history of consumer electronics have sold 5 to 10 million units in their third generation. This will be a defining year that determines if we're on a path towards many hundreds of millions and eventually billions of AI glasses, and glasses being the next computing platform like we've been talking about for some time, or if this is just going to be a longer grind. But it's great overall to see people recognizing that these glasses are the perfect form factor for AI, as well as just great stylish glasses. These are all big investments, especially the hundreds of billions of dollars that we will invest in AI infrastructure over the long term. I announced last week that we expect to bring online almost a gigawatt of capacity this year, and we're building a 2 gigawatt and potentially bigger AI data center that is so big that it'll cover a significant part of Manhattan if it were placed there. We're planning to fund all of this by, at the same time, investing aggressively in initiatives that use these AI advances to increase revenue growth. And we've put together a plan that will hopefully accelerate the pace of these initiatives over the next few years. That's what a lot of our new headcount growth is going towards. And how well we execute on this will also determine our financial trajectory over the next few years. There are a number of other important product trends related to our family of apps that I think we're going to know more about this year as well. We're going to learn what's going to happen with TikTok. And regardless of that, I expect Reels on Instagram and Facebook to continue growing. I expect Threads to continue on its trajectory to become the leading discussion platform and eventually reach a billion people over the next several years. Threads now has more than 320 million monthly actives and has been adding more than 1 million signups per day. I expect WhatsApp to continue gaining share and making progress towards becoming the leading messaging platform in the US, like it is in a lot of the rest of the world. WhatsApp now has more than 100 million monthly actives in the US. Facebook is used by more than 3 billion monthly actives, and we're focused on growing its cultural influence. And I'm excited this year to get back to some OG Facebook. All right, so this is also going to be a pivotal year for the metaverse. The number of people using Quest and Horizon has been steadily growing. And this is a year when a number of the long-term investments that we've been working on that will make the metaverse more visually stunning and inspiring will really start to land. So I think we're going to know a lot more about Horizon's trajectory by the end of this year. This is also going to be a big year for redefining our relationship with governments. We now have a U.S. administration that is proud of our leading companies, prioritizes American technology winning, and that will defend our values and interests abroad. And I am optimistic about the progress and innovation that this can unlock. So this is going to be a big year. I think that this is the most exciting and dynamic that I have ever seen our industry. Between AI, glasses, massive infrastructure projects, doing a bunch of work to try to accelerate our business and building the future of social media, we have a lot to do. And I think we're going to build some awesome things that shape the future of human connection. As always, I am grateful for everyone who's on this journey with us. Thank you. Here's Susan.
Thanks, Mark, and good afternoon, everyone. Let's begin with our consolidated results. All comparisons are on a year-over-year basis, unless otherwise noted. Q4 total revenue was $48.4 billion, up 21% on both a reported and constant currency basis. Q4 total expenses were $25 billion, up 5% compared to last year. Before I cover the specific cost lines, I would note that our fourth quarter expense growth rate reflects a 13 percentage point favorable impact from legal accrual reductions in Q4 and lower year-over-year restructuring costs. In terms of the specific line items, cost of revenue increased 15%, driven mostly by higher infrastructure costs. R&D increased 16%, primarily driven by higher employee compensation and infrastructure costs, which were partially offset by lower restructuring costs. Marketing and sales were approximately flat year over year. G&A decreased 67%, driven mostly by lower legal-related expenses due to a $1.55 billion reduction in legal accruals related to certain legal proceedings. We ended the year with over 74,000 employees, up 10% year over year, with growth primarily driven by hiring in priority areas of monetization, infrastructure, generative AI, Reality Labs, as well as regulation and compliance. Fourth quarter operating income was $23.4 billion, representing a 48% operating margin. Our tax rate for the quarter was 12%. Net income was $20.8 billion, or $8.02 per share. Capital expenditures, including principal payments on finance leases, were $14.8 billion, driven by investments in servers, data centers, and network infrastructure. Free cash flow was $13.2 billion. We paid $1.3 billion in dividends to shareholders, ending the year with $77.8 billion in cash and marketable securities and $28.8 billion in debt. Moving now to our segment results. I'll begin with our Family of Apps segment. Our community across the Family of Apps continues to grow, and we estimate more than 3.3 billion people used at least one of our Family of Apps on a daily basis in December. Q4 total Family of Apps revenue was $47.3 billion, up 21% year over year, and Q4 Family of Apps ad revenue was $46.8 billion, up 21% on both a reported and constant currency basis. Within ad revenue, the online commerce vertical was the largest contributor to year-over-year growth. On a user geography basis, ad revenue growth was strongest in Rest of World at 27%, followed by Asia Pacific and Europe at 23% and 22% respectively. North America grew 18%. In Q4, the total number of ad impressions served across our services increased 6%, and the average price per ad increased 14%. Impression growth was mainly driven by Asia Pacific. Pricing growth benefited from increased advertiser demand, in part driven by improved ad performance. This was partially offset by impression growth, particularly from lower monetizing regions and surfaces. Family of Apps other revenue was $519 million, up 55%, driven primarily by business messaging revenue growth from our WhatsApp business platform. We continue to direct the majority of our investments toward the development and operation of our Family of Apps. In Q4, Family of Apps expenses were $19 billion, representing 76% of our overall expenses. Family of Apps expenses were up 5%, primarily due to growth in infrastructure costs and employee compensation, which were partially offset by lower legal-related expenses. Family of Apps operating income was $28.3 billion, representing a 60% operating margin. Within our Reality Labs segment, Q4 revenue was $1.1 billion, driven by hardware sales and up 1% year over year. Reality Labs expenses were $6 billion, up 6% year over year, driven primarily by higher infrastructure costs and employee compensation, partially offset by lower restructuring costs. Reality Labs operating loss was $5 billion. Turning now to the business outlook. There are two primary factors that drive our revenue performance: our ability to deliver engaging experiences for our community and our effectiveness at monetizing that engagement over time. On the first, daily actives continue to grow across Facebook, Instagram, and WhatsApp year over year, both globally and in the United States. In Q4, global video time grew at double-digit percentages year over year on Instagram, and we're seeing particular strength in the US on Facebook, where video time spent was also up double-digit rates year over year. We see continued opportunities to drive video growth in 2025 through ongoing optimizations to our ranking systems. we're also making several product bets that are focused on setting up our platforms for longer-term success. Creators are one of our central focuses. On Instagram, we continue to prioritize original posts and recommendations to help smaller creators get discovered. We also want to ensure creators have a place to experiment with their content, so we introduced a new feature in Q4 that allows creators to first share a reel with people who don't follow them. This allows them to test content and see what performs best before deciding to share it with their followers, and also helps introduce them to entirely new audiences. Creative tools is another area we're investing in. In the coming weeks, we'll launch a new standalone app called Edits that provides a full suite of creative tools to make it easier for creators to make great reels on their phone. Another focus is making it easier for people to connect over content. Reels are already reshared over 4.5 billion times a day, and we've been introducing more features that bring together the social and entertainment aspects of Instagram. In the US, we recently launched a new destination in Reels that consists of content your friends have left a note on or liked. We're seeing very positive early results, and we'll look to expand this globally in the coming months. On Threads, we made tremendous progress in 2024, and our focus this year is establishing Threads as the place people come to keep up with what they care about. We're making a number of updates to our recommendation systems to prioritize more recent posts, surface content from top creators, and ensure people see more of the content from accounts they follow. We will also continue improving custom feeds so people can build personalized feeds on topics they're interested in. Finally, Meta AI usage continues to scale with more than 700 million monthly actives. We're now introducing updates that will enable Meta AI to deliver more personalized and relevant responses by remembering certain details from people's prior queries and considering what they engage with on Facebook and Instagram to develop better intuition for their interests and preferences. Now to the second driver of our revenue performance, increasing monetization efficiency. The first part of this work is optimizing the level of ads with an organic engagement. We continue to grow supply on lower monetizing surfaces like video, while optimizing ad supply on each of our surfaces to deliver ads at the time and place they will be most relevant to people. For example, we are continuing to better personalize when ads show up, including the optimal locations in the depth of someone's feed, to introduce ad supply when it's most optimal for the user and revenue. This is enabling efficient supply growth. Longer term, we also see impression growth opportunities on unmonetized surfaces like Threads, which we are beginning to test ads on this quarter. We expect the introduction of ads on Threads will be gradual and don't anticipate it being a meaningful driver of overall impression or revenue growth in 2025. The second part of increasing monetization efficiency is improving marketing performance. The ongoing enhancements to our ads ranking systems are an important driver of this work. In the second half of 2024, we introduced an innovative new machine learning system in partnership with NVIDIA called Andromeda. This more efficient system enabled a 10,000 times increase in the complexity of models we use for ads retrieval, which is the part of the ranking process where we narrow down a pool of tens of millions of ads to the few thousand we consider showing someone. The increase in model complexity is enabling us to run far more sophisticated prediction models to better personalize which ads we show someone. This has driven an 8% increase in the quality of ads that people see on objectives we've tested. Andromeda's ability to efficiently process larger volumes of ads also positions us well for the future as advertisers use our generative AI tools to create and test more ads. Another way we're delivering value for advertisers is through increased automation of their ad campaigns with Advantage Plus. Adoption of Advantage Plus shopping campaigns continues to scale, with revenue surpassing a $20 billion annual run rate and growing 70% year over year in Q4. Given the strong performance and interest we're seeing in Advantage Plus shopping and our other end-to-end solutions, we're testing a new streamlined campaign creation flow So advertisers no longer need to choose between running a manual or Advantage Plus sales or app campaign. In this new setup, all campaigns optimizing for sales, app, or lead objectives will have Advantage Plus turned on from the beginning. This will allow more advertisers to take advantage of the performance Advantage Plus offers, while still having the ability to further customize aspects of their campaigns when they need to. We plan to expand to more advertisers in the coming months before fully rolling it out later in the year. Advantage Plus Creative is another area where we're seeing momentum. More than 4 million advertisers are now using at least one of our generative AI ad creative tools, up from 1 million 6 months ago. There has been significant early adoption of our first video generation tool that we rolled out in October, image animation, with hundreds of thousands of advertisers already using it monthly. Next, I would like to discuss our approach to capital allocation. Our primary focus remains investing capital back into the business, with infrastructure and talent being our top priorities. On the first, we expect compute will be central to many of the opportunities we're pursuing as we advance the capabilities of Llama, drive increased usage of generative AI products and features across our platform, and fuel core ads and organic engagement initiatives. We're working to meet the growing capacity needs for these services by both scaling our infrastructure footprint and increasing the efficiency of our workloads. Another way we're pursuing efficiencies is by extending the useful lives of our servers and associated networking equipment. Our expectation going forward is that we'll be able to use both our non-AI and AI servers for a longer period of time before replacing them, which we estimate will be approximately 5.5 years. This will deliver savings in annual CapEx and resulting depreciation expense, which is already included in our guidance. Finally, we're pursuing cost efficiencies by deploying our custom MTIA silicon in areas where we can achieve a lower cost of compute by optimizing the chip to our unique workloads. In 2024, we started deploying MTIA to our ranking and recommendation inference workloads for ads and organic content. We expect to further ramp adoption of MTIA for these use cases throughout 2025, before extending our custom silicon efforts to training workloads for ranking and recommendations next year. From a hiring standpoint, our focus continues to be on adding technical talent to support our strategic priorities. In the fourth quarter, nearly 90% of our year-over-year headcount growth was within the R&D function. The remaining growth was primarily in cost of revenue as we added infrastructure headcount to support our data center operations. In 2025, we expect headcount growth will continue to be primarily driven by technical roles across our priority initiatives within infrastructure, monetization, Reality Labs, generative AI, as well as regulation and compliance. We anticipate headcount growth in our business functions will remain relatively limited. To achieve our ambitions in these areas, we will need to continue executing at a rapid pace. We're supporting this by building tools to help our engineering base be more productive. As part of our efficiency focus over the past 2 years, we've made significant improvements in our internal processes and developer tools and introduced new tools like our AI-powered coding assistant, which is helping our engineers write code more quickly. Looking forward, we expect that the continuous advancements in Llama's coding capabilities will provide even greater leverage to our engineers, and we are focused on expanding its capabilities to not only assist our engineers in writing and reviewing our code, but to also begin generating code changes to automate tool updates and improve the quality of our code base. Finally, we expect our strong financial position will enable us to support these investments while continuing to return capital to shareholders through share repurchases and dividends. Moving to our financial outlook, we expect first quarter total to be in the range of $30.5 to $41.8 billion. This reflects 8 to 15% year-over-year growth, or 11 to 18% growth on a constant currency basis, as our guidance assumes foreign currency is an approximately 3% headwind to year-over-year total revenue growth based on current exchange rates. This also reflects the effect of lapping leap day in the first quarter of 2024. While we are not providing a full year 2025 revenue outlook, we expect the investments we're making in our core business this year will give us an opportunity to continue delivering strong revenue growth throughout 2025.
Can we pull this
Turning
down?
now to the expense outlook. We expect.
Yeah, I think let's just share some thoughts for a couple minutes before we jump over to Tesla. It's going to be in 4 minutes
Sounds
or
good.
so.
Dude, my timing today has been on Jim Cramer level. Like every time I say something, I'm like, oh, ServiceNow will do well. They're the worst of the day. I said that comment on, them needing hundreds of billions of dollars of AI infrastructure going forward. Super bullish. They want to enable all of these new technologies like Llama 4. All that stuff was so bullish. Okay.
Mhm.
And then I said I opened up the mic. I said, that's bullish. And then the next comment she said was, but we believe that our current chips are going to last longer without upgrade than previously expected. Down candle on NVIDIA. They're still up 2%, but they were at like 3% a second ago. It's just funny.
I find that interesting that they're not providing full year guidance.
Yeah, I think all of Mag 7 is going that direction.
Really?
Yeah, Google stopped. It's what's going to happen now. SoFi needs to learn a lesson. They should start doing that as well. We'd actually be up.
They'd be higher if they don't provide guidance.
Yeah, I think so.
How do you figure?
Do you think that SoFi's guidance did them favors this time around?
No, but whenever you don't provide guidance,
Sorry, it was not playing.
whenever you provide guidance, it just does
Like that
people
Jim
assume
Cramer
you're-
timing. Did you just see that, by the way? It was not playing it. I share it, and it starts playing music the second I share it.
I mean, Tesla stopped pulling back a little bit right before the call is about to start. We're only up about 1% now. We were up as much as 4 or almost 5% about an hour ago. So we'll see how it goes when the call actually starts.
You want to look at markets for a second?
Yeah, let's do it.
Really quickly, just because this is an absolute big name, but NVIDIA up 1.9%, ServiceNow down 7.3%, but slowly making a recovery. Meta up 4.81%, at one point hitting $716 per share, okay, in after hours. Microsoft down 1.9%, and Tesla up 1.9%, but not nearly as high as what they were holding out at, above 400 at 407 previously, now under the $400 mark. What do you think?
I think we're going to have a big green day tomorrow. We're driven predominantly by Meta. It's going to bring up NVIDIA. I think, we'll see what Microsoft opens tomorrow, but I think we can have it. Like, these large tech companies have the ability to dictate what the entire market does the following day.
Are you having fun, by the way?
Yeah.
Okay.
It's a trick question.
No, it's not a trick question at all. I always like doing streams with you. Even if it's just me and you, I always have a great time. It helps keep things busy, even whenever I need to plug numbers and stuff. And then vice versa, if you're tweeting or something, I don't know.
Yeah, I'm having fun. Great time.
We will be switching over to the Tesla earnings call. It should be live right now, but it is not. But don't worry, I have it up. I might actually switch to their YouTube cast instead of the embedded one. It might end up having a better performance, maybe. It's crazy how little people are actually watching Tesla earnings directly on Tesla, and the high majority of people are watching it through
other people.
Yeah.
Yeah.
Like it says about 12,700 people are watching right now.
I guarantee you just Rob has like close to that amount probably.
Yeah. Yeah. Meet Kevin's at 8,000 right now, and it's just starting right now. Farzad has nearly 4,000. Amit has
Rob has 12,000. So
yeah,
just as much as Tesla themselves.
yeah. However, climbing quickly as everyone wants it to launch, but in Tesla fashion, they're late. So,
just like Tannor.
I learned from the best. You want to be a good entrepreneur, a good leader?
Yeah, be late.
Be late.
Screw punctuality. That's for losers. You want to stay up late your whole life? Be punctual.
But overall, I'm really happy we listened to the Meta call because that got me really bullish. He is freaking excited.
Dude, I'm excited just listening to his opening remarks. Like, it's just when they find an AI that can code to a mid-level engineer, like, it's game over, man. Like, that's when you reinvent the entire industry, because everybody who's not a coder can then just rely on this thing exclusively to make whatever app ideas they have.
Yeah. No, 100%. Still nothing just yet. We are waiting. Come on. I hope it's all about Optimus. I thought there were some creative ideas, sort of being spread around. Like, people don't quite understand the total addressable market of these robots potentially. It's like, as these start to go out this year, like, Tesla doesn't even need to freaking do cars anymore. Like, that's how large the robot segment is.
I mean, once it's actually here.
Yes.
Which is a big, long time. It's not going to be here for a while.
Well, I don't know about that. I think they'll deliver some this year.
No, but it doesn't matter if they deliver some this year. We're talking about it being large enough to replace what the car business is doing right now for revenue, and that's going to be a long time.
No, of course. But what I think will end up happening is the reinvestment for future growth in automotive will slow down as they put every dollar towards Optimus, because that's what the next frontier is going to be about. I think, honestly, the car business will have to be self-sustaining, and then they'll just pour every last dollar into growing what is really going to grow their business on.
Maybe from an investment perspective, but I would imagine that from a market perspective, like, FSD is the next thing that the market is following, and then the robot later on down the line. Like, if you compare it to SoFi, FSD is like the lone platform business in terms of the excitement, and then the Optimus Bot is like the technology platform. It's going to take a while for it to be huge.
Yeah, Optimus is level 1 options where
exactly.
I think we might be having the call now. Okay, we're switching over.
Let's do it.
And I'm joined today by Elon Musk and Vaibhav Taneja and a number of other executives. Our Q4 results were announced at about 3 p.m. Central Time in the update deck we published at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events or results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue. Before we jump into Q&A, Elon has some opening remarks. Elon?
Thank you. So in summary, in Q4, we set a record and delivered vehicles at an annualized rate of nearly 2 million a year. So congratulations to the Tesla team on excellent work achieving record production and deliveries. Model Y was the best-selling vehicle of any kind for 2024. That's worth noting. Not just the best electric vehicle, the best vehicle of any kind on Earth, number one, was Model Y. We're staying focused on maximizing volumes and obviously doubling down for, I don't know what, really, I was going to say doubling down on autonomy, but really it's like autonomy is like 10xing things, frankly. Doubling is not even enough. we made many critical investments in 2024 in manufacturing, AI, and robotics that will bear immense fruit in the future. Immense. Like it's, in fact, to such a scale that it is difficult to comprehend. And I've said this before, and I'll stand by it. I see a path. I'm not saying it's an easy path, but I see a path to Tesla being the most valuable company in the world by far. Not even close. Like maybe several times more than. I mean, there is a path where Tesla is worth more than the next top 5 companies combined. There's a path to that. I mean, I think it's like an incredibly, it's like a difficult path, but it is an achievable path. And that is overwhelmingly due to autonomous vehicles and autonomous humanoid robots. So our focus is actually building towards that. And that's what we're laying the ground. We laid the groundwork for that in 2024. We'll continue to lay the groundwork for that in 2025. In fact, more than lay the groundwork, actually, so we'd be building the structure. We're building the manufacturing lines, I'd like setting up for what I think will be an epic 2026 and a ridiculous 27 and 28. Ridiculously good. That is my prediction. As yet, very few people understand the value of full self-driving and our ability to monetize the fleet. I've some of these things I've said for quite a long time, and I know people have said, "Well, Elon's the boy who cried wolf," like several times. But I'm telling you, there's a damn wolf this time, and you can drive it. In fact, it can drive you. It's a self-driving wolf. For a lot of people, their experience of Tesla autonomy is like, if it's even a year old, if it's even 2 years old, it's like meeting someone when they're like a toddler and thinking that they're going to be a toddler forever. But obviously they're not going to be a toddler forever. They grow up. but if their last experience was like, oh, FSD was a toddler, it's like, well, it's grown up now. Have you seen it? It's like walks and talks. That's really what we've got. And it's difficult for people to understand this because human intuition is linear, as opposed to what we're seeing is exponential progress. So that's why my number one recommendation for anyone who doubts is simply try it. Have you tried it? When's the last time you tried it? And the only people who are skeptical are those who have not tried it. So, a passenger car typically has only about 10 hours of utility per week out of 168. A very small percentage. Once that car is autonomous, my rough estimate is that it is in use for at least a third of the hours of the week. So call it 50, maybe 55 hours of the week. And it can be used for both cargo delivery and people delivery. So even, let's say people are asleep, but you can deliver packages in the middle of the night or resupply restaurants or whatever the case may be, whatever people need at all hours of the day or night. That same asset, the thing that is these things that already exist with no incremental cost change, just a software update, now have 5 times or more the utility than they currently have. I think this will be the largest asset value increase in human history. Maybe there's something bigger, but I just don't know what it is. And so people who look in the rearview mirror are looking for past precedent, except I don't think there is one. So, but the reality of autonomy is upon us. And I repeat my advice: try driving the car, or let it drive you. So now it works very well in the US, but of course it will over time work just as well everywhere else. So we're working hard to grow our annual volumes. Our constraint this year, our current constraint is battery packs this year, but we're working on addressing that constraint. And I think we will make progress on addressing that constraint. And then things are really going to go ballistic next year and really ballistic in 27 and 28. So, yeah. So a bit more on full self-driving. Our Q4 vehicle safety report shows continued year-over-year improvement in safety for vehicles. So the safety numbers, if somebody has supervised full self-driving turned on or not, the safety differences are gigantic. And people have seen the immense improvement with version 13 and with incremental versions in version 13. And then version 14 is going to be yet another step beyond that is very significant. We launched the Cortex training cluster at Gigafactory Austin, which was a significant contributor to FSD advancement. And we continue to invest in training infrastructure at our Texas headquarters. So the training needs for Optimus humanoid robot are probably at least ultimately 10x what's needed for the car, at least to get to the full range of useful roles. You can say, like, how many different roles are there for a humanoid robot versus a car? A humanoid robot has probably 1,000 times more uses and more complex things than in a car. That doesn't mean the training scales by 1,000, but it's probably 10x. Now you can do this progressively, so it doesn't mean like Tesla's going to spend like $500 billion in training compute, because we will obviously train the Optimus to do enough tasks to match the output of Optimus robots. And obviously the cost of training is dropping dramatically with time. So, but it is like it's one of those things where I think long-term Optimus will be. Optimus has the potential to be north of $10 trillion in revenue. Like it's really bananas. So then you can obviously afford a lot of training compute in that situation. In fact, even $500 billion of training compute in that situation would be quite a good deal. Yeah. The future is going to be incredibly different from the past, that's for sure. We live at this unbelievable inflection point in human history. So, yeah. So, the proof is in the pudding. So we're going to be launching unsupervised full self-driving as a paid service in Austin in June. So, I've talked with the team. We feel confident in being able to do an initial launch of unsupervised, no one in the car, full self-driving in Austin in June. We already have Teslas operating autonomously unsupervised full self-driving at our factory in Fremont, and we'll soon be doing that at our factory in Texas. So thousands of cars every day are driving with no one in them at our Fremont factory in California. They will soon be doing that in Austin and then elsewhere in the world at the rest of our factories, which is pretty cool. And the cars aren't just driving to exactly the same spot, because obviously it all want to collide at the same spot. The cars are actually programmed with what lane they need to park into to be picked up for delivery. So they drive from the factory end of line to their destination parking spot to be picked up for delivery to customers. And they're doing this reliably every day, thousands of times a day. It's pretty cool. Like I said, the Teslas will be in the wild with no one in them in June in Austin. So what I'm saying is, this is not some far off mythical situation. It's literally, 5-6 months away, 5 months away, type of thing. And while we're putting our toe in the water gently at first, just to make sure everything's cool, our solution is a generalized AI solution. It does not require high precision maps of a locality. So we just want to be cautious. It's not that it doesn't work beyond Austin. In fact, it does. We just want to put a toe in the water, make sure everything is okay, then put a few more toes in the water, then put a foot in the water, with safety of the general public and those in the car as our top priority. With regard to Optimus, obviously I'm making these revenue predictions that sound absolutely insane. I realize that, but they are. I think they will prove to be accurate. Yeah. Now with Optimus, there's a lot of uncertainty on the exact timing, because it's not like a train arriving at the station for Optimus. We are designing the train and the station and in real time while also building the tracks. and so they're like, why didn't the train arrive exactly at 12:05? I'm like, we're literally designing the train and the tracks in the station in real time so you're like, how can we predict this thing with absolute precision? It's impossible. The normal internal plan calls for roughly 10,000 Optimus robots to be built this year. Will we succeed in building 10,000 exactly by the end of December this year? Probably not. But will we succeed in making several thousand? Yes, I think we will. Will those several thousand Optimus robots be doing useful things by the end of the year? Yes, I'm confident they will do useful things. The Optimus in use at the Tesla factories, production design 1, will inform what we change for production design 2, which we expect to launch next year. And our goal is to ramp Optimus production faster than maybe anything's ever been ramped. Meaning, like, aspirationally, an order of magnitude ramp per year. Now, if we aspire to an order of magnitude ramp per year, perhaps we only end up with a half order of magnitude per year. But that's the kind of growth that we're talking about. It doesn't take very many years before we're making 100 million of these things a year. If you go up by, let's say, a factor, by 5x per year. It's insane. Not 50%, 500%. So, these are big growth numbers. But we do need to. This is an entirely new supply chain. It is entirely new technology. There's nothing off the shelf to use. We tried desperately with Optimus to use any existing motors, any actuators, sensors. Nothing worked for a humanoid robot at any price. We had to design everything from physics first principles to work for a humanoid robot, and with the most sophisticated hand that has ever been made before, by far. And Optimus will be able to play the piano, and be able to thread a needle. I mean, this is the level of precision no one has been able to achieve, and so it's really something special. So my prediction long term is that Optimus will be overwhelmingly the value of the company. Regarding energy, back to Earth. Earth to Elon. Can you come back here for a minute? Okay, back to Earth. Energy storage is a big deal, and will become it's already super important, will become incredibly important in the future. And it is something that enables far greater energy output to the grid than is currently possible. Because the grids are the vast majority of the grid has no energy storage capability. So they have to design the power plants for very high peaks, and assuming that there's no energy storage. Once you have grid energy storage and home-based energy storage, the actual total energy output per year of the grid is dramatically greater than people think. Maybe it's at least double. This will drive the demand of stationary battery packs, and especially the grid scale ones, to insane, basically as much demand as we could possibly make. We have our second factory, which is in Shanghai, that's starting operation, and we're building a third factory. So we're trying to ramp output of the stationary battery storage as quickly as possible. Now, there is a challenge here where we have to be careful that we're not robbing from one pocket to take to another pocket, because for a given gigawatt hours per year of cell output, we have to say, does it go into stationary applications or mobile applications? It can't go into both. So we have to make that trade-off. But overall, the demand for total gigawatt hours of batteries, whether mobile or stationary, that will grow in a very, very big way over time. So in conclusion, 2025 really is a pivotal year for Tesla. And when people look back on 2025 and the launch of unsupervised full self-driving, true real-world AI that actually works, I think they may regard it as the biggest year in Tesla history, maybe even bigger than our first car, the Roadster, or the Model S, or the Model 3 or Model Y. In fact, I think it probably will be viewed 25 as maybe the most important year in Tesla's history. There is no company in the world that is as good at real-world AI as Tesla. I don't even know who's in second place. Like, you say, who's in second place for real-world AI? I would need a very big telescope to see them. That's how far behind they are. All right.
Great. Thank you very much, Elon. And Vaibhav has some opening remarks as well.
Yeah, I'll talk about things on Earth. As Elon mentioned, in Q4, we set records in vehicle deliveries and energy storage deployments in an uncertain macro environment. We were able to grow auto and energy storage volumes both sequentially and on a year-on-year basis. For this, I would like to thank the efforts of everyone at Tesla to make this a reality, and our customers who helped us achieve this feat. Coming into the fourth quarter, our focus was to reduce inventory levels in the automotive business. And we accomplished that by ending the quarter with the lowest finished good inventory in the last 2 years. This was a result of offering not only attractive financing options, but also other discounts and programs, which impacted ASPs. While we saw volume growth in almost all regions that we operate in, we hit a new record for deliveries in the Greater China market. This is an encouraging trend since we grew volume in a highly competitive BEV market. On the automotive margin front, we saw a quarter-over-quarter decline, primarily due to lower ASPs and due to the recognition of FSD-related revenue in Q3 from feature releases. Our journey on cost reduction continues, and we were able to get our overall cost per car down below $35,000, driven primarily by material costs. This was despite increased depreciation and other costs as we prepare for the transition to the new Model Y, for which we recently started taking orders in all markets. All our factories will start producing the new Model Y next month. While we feel confident in our team's abilities to ramp production quickly, know that it is an unprecedented change, and we're not aware of anybody else taking the best-selling car on the planet and updating all factories at the same time. This changeover will result in several weeks of lost production in the quarter. As a result, margins will be impacted due to idle capacity and other ramp-related costs, as is common in any launch, but will be overcome as production is ramped. We will be introducing several new products throughout 2025. We are still on track to launch a more affordable model in the first half of 2025, and we'll continue to expand our lineup from there. On a dollar-for-dollar basis, we believe we have the most compelling lineup today compared to the industry, and it will continue to get better from here. As always, all our products come with the best software in the industry, autonomy features, and capable of full autonomy in the future. And despite the premium experience, the total cost of ownership is close to mass market, less premium competitors. Energy storage deployments reached an all-time high in Q4 and resulted in, but declined sequentially. This was a result of higher, growth came from Megapack and Powerwall. Both businesses continue to be supply constrained, and like Elon mentioned, we're trying to ramp up production with Mega Factory Shanghai coming online this quarter onwards. While quarterly deployments will likely continue to fluctuate sequentially, we expect at least 50% growth in deployments year over year in 2025. Gross profit and margins in the service and other business was up year over year, but declined sequentially. This was the result of higher service center costs and lower profit from used car business. The businesses within service and other primarily support our new car business, especially through their impact on total cost of ownership. Therefore, while we manage them to be positive on a GAAP basis, we do not expect similar margins as the rest of the business. There's a lot of uncertainty around tariffs. Over the years, we've tried to localize our supply chain in every market, but we are still very reliant on parts from across the world for all our businesses. Therefore, the imposition of tariffs, which is very likely, and any reciprocity will have an impact on our business and profitability. Our operating expenses grew both year over year and sequentially. The biggest driver of the increase was R&D as we continue to invest in AI-related initiatives. The remaining increase came from growth in our sales capabilities and marketing efforts from referral program. For 2025, we expect operating expenses to increase to support our growth initiatives. It is important to point out that the net income in Q4 was impacted by a $600 million mark-to-market benefit from Bitcoin due to the adoption of a new accounting standard for digital assets, whereby we'll take mark-to-market adjustments through other income every reporting period going forward. Our free cash flow for the quarter was $2 billion, and despite CapEx increase of over $2.4 billion in 2024, we were able to generate free cash flow of $3.6 billion for the year. CapEx efficiency is something we are extremely focused on. While we have invested in AI-related initiatives, we have done so in a very targeted manner to utilize this spend to get immediate benefits. The build-out of Cortex was accelerated because of the actually helped accelerate the rollout of FSD version 13. Accumulative AI-related CapEx, including infrastructure, so far has been approximately $5 billion. And for 2025, we expect our CapEx to be flat on a year-over-year basis. In conclusion, like Elon said, 2025 is going to be a pivotal year for Tesla. There are a lot of investments which we have made and will continue to make in this coming year, which will set the pace for the next phase of growth. And it is something which now I'm getting out of Earth. It is going to be out of this world. And we just are putting the right foundation. And that's all I have.
Great. Thank you very much, Vaibhav. Now we will move over to investor questions, and we'll start with say.com. The first question is unsupervised FSD still planned to be released in Texas and California this year? What hurdles still exist to make that happen? You addressed the Texas piece, I think, already. So
yeah, I'm confident that we will release unsupervised FSD in California this year as well. Yeah. In fact, I think we will most likely release unsupervised FSD in many regions of the country, of the US, by the end of this year. Like I said, we're putting a toe in the water, then a few toes, then a foot, then leg, then make sure everything's cool. And we're looking for a safety level that is significantly above the average human driver. So it's not anywhere like much safer, not like a little bit safer than human, way safer than human. So the standard has to be very high, because the moment there's any kind of accident with an autonomous car, this immediately gets worldwide headlines, even though about 40,000 people die every year in car accidents in the US. And most of them don't even get a mention anywhere. But if somebody scrapes a shin with an autonomous car, it's headline news.
We want to avoid that.
Yeah. So it's really the only thing holding us back is an excess of caution. But people can certainly get a feel for how well the car would perform as unsupervised FSD by simply allowing the car to drive you around your city and see how many times did you have to intervene, not where you wanted to intervene or were a little concerned, but how many times did you have to intervene for definite safety reasons. And you will find that is currently very rare, and over time, almost never.
Great. Thank you very much. The next question is, are there any discussions with other auto companies about licensing FSD?
Yes. What we're seeing is, at this point, significant interest from a number of major car companies about licensing Tesla full self-driving technology. What we've generally said is the best way to know what to do is take one of our cars apart, and then you can see where the placement of the cameras are, what the thermal needs are of the Tesla AI inference computer. That's better than us, sending some CAD drawings. And then we're only going to entertain situations where the volume would be very high. Otherwise, it's just not worth the complexity. And we will not burden our engineering team with laborious discussions with other engineering teams until we obviously have unsupervised full self-driving working throughout the United States. I think the interest level from other manufacturers to license FSD will be extremely high once it is obvious that unless you have FSD, you're dead.
Great. Thank you very much. The next question is Optimus now mostly design locked for 2025 production?
Optimus is not design locked. So when I say we're designing the train as it's going to, we're redesigning the train as it's going down the tracks while redesigning the tracks and the train stations.
Yeah, we've already answered.
Mm-hmm. Yeah, it's rapidly evolving. It's rapidly evolving in a good direction. It's pretty damn amazing, actually. The team's doing a fantastic job. We really have by far the best team of humanoid robotics engineers in the world. And we also have all the other ingredients necessary, because you need a great battery pack, you need great power electronics, you need great charging capability, you need great communications, good Wi-Fi and cellular connectivity, and of course you need real world AI, and then the ability to scale that production to huge levels. So you have to design for manufacturing. The things what other companies are missing is they're missing the real world AI, and they're missing the ability to scale manufacturing to millions of units a year.
I think that is an underappreciated thing, that industrialization of design is a whole different thing than making a design.
Yeah, prototypes are trivial, basically. Prototypes are easy, production is hard. I've said that for many years. The problem is that there's those who've never been involved in production or manufacturing somehow think that once you come up with some eureka design that you magically can make 1 million units a year. And this is totally false. There needs to be some Hollywood story where they show actually the problem is manufacturing. I've never even heard of one. It just doesn't fit the narrative. the Hollywood thing is like, it's like some lone inventor in a garage goes eureka, and suddenly it files a patent, and suddenly there's millions of units. But like, listen, guys, we're missing really 99% of the story. 1% is, that old saying of 1%, like a product is 1% inspiration, 99% perspiration. The Hollywood shows you the 1% inspiration but forgets about the 99% perspiration of actually figuring out how to make that initial prototype manufacturable and then manufactured at high volume such that the product is reliable, low cost, consistent, doesn't break down all the time. And that is 100 times harder, at least, than the prototype.
Then you have to get it there, deliver it back. Yeah,
you're going to meet all these regulations, and there's a zillion regulators around the world. It's very difficult.
Great, thank you. The next question is also Optimus related. When will Tesla start selling Optimus, and what will the price be?
Well, it may for this year we expect to just close the loop with Optimus being used internally at Tesla, because we obviously can easily use several thousand humanoid robots at Tesla for like the most boring, annoying tasks in the factory, like the tasks nobody wants to do, where we have to like beg people to do this task, and then it's like the robot's totally happy to do the boring, dangerous, repetitive task that no humans want to do. And that's also actually some of the easiest use cases for us to have Optimus do things like like load the hopper, like for like say in body line, if you're like transporting pieces of sheet metal to the robot, which is already robot, the robot welding line for the body, and you just have to nonstop take things out of a from one fixture to another fixture. And it's a very boring job. That's the kind of thing what Optimus could do.
The guy who runs around and dumps all the weld studs in the bins.
Yeah, there's a ton of boring jobs, tedious jobs, dangerous, slightly dangerous jobs that's perfect for Optimus. So we expect to use Optimus for those tasks at our factories, and that'll help us close the loop for improvement this year. It's really with production version 2, which I think launches sometime next year. I'd like it to be the beginning of next year, but maybe it's more like the middle of next year. And then we have to just with a production line that is designed for on the order of 10,000 units a month versus 1,000 units a month. So like when you design a unit when you design a production line for 1,000 units a month, it takes you a while to actually reach anywhere close to 1,000 units a month. When you design, and for any given production output, it takes you a while to actually reach its potential. But the current line that we're designing is for roughly 1,000 units a month of Optimus robots. The next line would be for 10,000 units a month. The line after that would be for 100,000 units a month. And I think probably with version 2, and as a very rough guess, because there's so much uncertainty here, very rough guess that we start delivering Optimus robots to companies that are outside of Tesla in maybe the second half of next year, something like that. But like, so this is such an exponential ramp that it'll go from no one's receiving humanoid robots to these things like coming out like crazy.
So we can't build enough.
Well, we're always going to be in the we can't build enough situation. Demand will not be a problem, even at a high price. And then, as I said, like once we're at a steady state of above 1 million units a year, I think the production, I'm confident at 1 million units a year that the production cost of Optimus will be less than $20,000. If you compare the complexity of Optimus to the complexity of a car, so just the total mass and complexity of Optimus is much less than a car. So I would expect that at similar volumes to, say, the Model Y, which is over 1 million units a year, that you'd see Optimus be, I don't know, half the cost, or something like that. what the price of Optimus is a different matter. The price of Optimus will be set by the market demand.
Great. Thank you very much. The next question is, what is the status on mass production of the Tesla Semi, and how will it impact revenue at scale?
I can take that one. So we just closed up the Semi factory roof and walls last week in Reno. It's ahead of schedule, which is great with the weather. In Reno, you never know what's going to happen, but we're prepping for mechanical installation of all the equipment in the coming months. The first builds of the high volume Semi design will come late this year in 2025 and begin ramping early in 2026. But as we've said before, the Semi is a TCO no brainer. Like it's really similar to the Optimus. It's set by how much people pay, and then it as the total cost of ownership, it's much cheaper than any other transportation you can have. So at that point, when we're at scale, it will meaningfully contribute to Tesla's revenue. Well, I think it's difficult to say how much. Anything you want to add, Elon?
No, I mean, I do think that Tesla Semi, again, with autonomy, is going to be incredibly valuable. That we actually have a shortage of truck drivers in America. That's one of the limiting factors on transport. People are human, so they get tired, and sometimes, there's. I have a lot of respect for truck drivers because it's a tough job. But because it's a tough job, there's not that many people that want to do it. And there's actually fewer, I believe, my understanding is correct, there are fewer people entering truck driving as a profession than are leaving it.
Yes.
So when you think, yeah, exactly. So when you consider, okay, there's more people leaving truck driving as a profession than entering it, well, we're going to have a real logistics problem as time goes by. So autonomy will be very important to meet that need. So it'll I don't know. It's a several billion a year opportunity, which I don't know in this context, is that these days does several billion a year matter? I think it does. Not nothing. It's probably it's probably like a 10 billion a year thing. Yeah, it's $1 billion a month at some point probably. But it's all this is going to pale in comparison to Optimus. So yeah, $1 billion a month it's a lot, but it's not. It's going to be like 1% of Optimus or something,
Great, thank you very much. We already covered the next question in opening remarks. So moving on, is it expected that Tesla will need to upgrade Hardware 3 vehicles, and if so, what is the timeline and expected impact to Tesla's capex? I think they're referring to cost there.
They're really asking the tough questions, aren't they?
I guess we haven't stopped working on Hardware 3 yet. We are still making software releases. We released the 12.6 release recently, which was like a baby V13, but it's a significant improvement compared to what they had previously. And people are still finding ways to distill larger models into smaller models. So we're not giving up on Hardware 3. We're still working on it. Just the releases will trail the Hardware 4 releases.
Great, thanks, Ashok.
Yeah, I mean, I think the honest answer is that we're going to have to upgrade people's Hardware 3 computer for those that have bought full self-driving, and that is the honest answer, and that's going to be painful and difficult, but we'll get it done. Now I'm kind of glad that not that many people bought the FSD package.
Thanks, Elon. The next question. Has Tesla given up on ramping their solar roof product?
No, we're sorry, Mike. Oh, Mike, go ahead. Yeah.
Oh, yeah, I can take it. Yeah, solar roof remains a core part of the residential product portfolio, and it still remains where it draws a lot of customer interest despite it being premium products. We've worked on multiple iterations of engineering to make the product easier to install and distribute by reducing the SKU count. And more recently, rather than direct installation, we are focused on growth through our nationwide network of certified installers. And many of those, they've been installing solar roof with us for many years.
Yeah, that's actually turned out to be a much better way for is just let the roof just supply product to the roofing industry. And especially when somebody's is getting a new roof anyway, or building a house from scratch. Obviously, this is by far the most efficient time to put in a solar roof, as opposed to putting a solar roof on a house where the roof still has 20 years of life. That's not economically sensible. But if it's a new house or the roof needs to be replaced anyway, then solar roof can make a lot of sense. And it is a premium product. It's like it's kind of like Model S, Model X or something. It's like it's a premium product. I think it looks really cool. And your house generates electricity, and if you combine it with the Tesla Powerwall battery, then you can be self-sufficient. So even if the grid turns off for several days, your house still works. And your roof looks awesome. So it's like, I recommend anyone who can afford it, get the Tesla solar roof and the Powerwall. Your family's life might depend on it.
Get enough.
And just in terms of convenience, your kids are not going to yell at you because their computers don't work because the power went out and you can't charge your phone.
True story.
Actually happens. Yeah. You literally can't even call anyone because your phone's out of juice.
Thank you very much. The next question was covered in opening remarks, so we will skip that. And the last question from say.com, what technical breakthroughs will define V14 of FSD, given that V13 already covered photon to control?
Well, we've gone a hell of a lot further than photons to output. We've been in sort of the nothing but nets situation, nothing but neural nets from photons to controls for a while now. We're just improving the neural nets. I guess we could get into some of the technical details to some degree. I have to say, I continue to be amazed by just how effective autoregressive transformers are at solving a wide range of problems. I mean, Ashok, is there anything you'd like to add there without giving away the sort of family secrets?
Except for things we put on X already. So continuing to scale the model size a lot. We scale a bunch in V13, but then there's still room to grow. So we're going to continue to scale the model size. We're going to increase the context length even more. The memory is sort of like limited right now. We want to increase the amount of memory it holds, like to even minutes of context for driving. We're going to add audio to handle emergency vehicles better. Add like data of the tricky corner cases that we get from the entire fleet. Any interventions or any kind of user intervention. We just add that to the data set. So the scaling in basically every axis, like training compute, data set size, model context, and also all the reinforcement learning objectives.
Great. Alrighty. With that, we will move over to analyst questions. So just as a reminder, you will need to unmute yourself to ask your question. The first question will be coming from Daniel Roska from Bernstein. Daniel, please go ahead and unmute yourself.
Hey, good evening, everybody. It's Daniel from Bernstein. Elon, Tesla's share price clearly already includes quite a few of the anticipated benefits you talked about today, yet realizing what you call kind of difficult but achievable will take some time. What are you pushing the Tesla executive team to do differently now to accelerate the innovation in order to realize the value you described for the company?
Well, I mean, we're working on perfecting real-world AI and making rapid progress week over week, if not month, certainly month over month, but often week over week. I spend a lot of time with the Tesla AI team and the Tesla Optimus team. I mean, I go where the problem is essentially. Like, not, if something, this is, unfortunate. Sometimes I don't talk to a Tesla executive and like, hey, we don't see you very often. I'm like, that's because your stuff is working awesome. Your stuff is working really great. Unfortunately, I don't see them very often because I go where the problem is. So, where the problem is, what's the greatest challenge that lies ahead? So, obviously, there are many challenges with Optimus. It's a hard problem to solve. many challenges with vehicle autonomy, but we're making rapid progress in both. Yeah.
Okay. I mean,
Yeah.
sounds like you've got a conviction that the pieces you need, right, are in place.
Yeah.
If we kind of go 12 months down the line and we look back, and you had some of those, but maybe what are the kind of 2 or 3 KPIs that would tell you that you're on track and it's going the right way, and the pieces you've put in place are the right pieces, right? That's kind of what I'm looking for. Or other way around, where would it be off most likely in your mind that you say, hey, I need to go back there and I need to change something to enable the team better?
Well, I mean, I think the predictions that I'm making here are going to be pretty accurate. And it's worth noting because sometimes people say, "Oh, Elon's always late." Well, actually, no. The problem is that the media reports on when I'm late, but never reports on when I'm early. So sure, I'm optimistic, but I'm not that optimistic. There are many cases in the past where we've been early. Such as completion of the Shanghai factory, or in fact, factory completion has generally been ahead of schedule, not behind. Yeah. But I like I said, I'm very confident we'll have released unsupervised full self-driving, fully autonomous Teslas in Austin and several other cities in America by the end of this year. That's probably everywhere in America next year, and everywhere in North America at least. I think in terms of next year, our constraint, I think it's likely to be just regulatory. Like Europe really has, for example, Europe is a layer cake of regulations and bureaucracy, which that really needs to be addressed. There's this joke like America innovates, Europe regulates. It's like, guys, there's too many refs on the field. I mean, for example, for us just to release supervised full self-driving in Europe, even though it works really well, we have to go through a mountain of paperwork with the Netherlands, which is our primary regulatory authority. Then the Netherlands presents this to the EU in, I think, May. And there's like this big EU country committee. We expect it to be approved at that time, but there's nothing we can do to make that May happen sooner. In fact, nobody seems to do. I guess all the countries would have to somehow vote in some way to have it happen sooner than May. Otherwise, it won't happen sooner than May. So then when is unsupervised FSD allowed in Europe? I'm like, May next year, maybe? I don't know. Well, I have to find out when the EU is meeting again. Sometimes it's a 12-month cadence, sometimes a 6-month cadence. Then in China, which is also a huge, gigantic market, we do have some challenges because they currently allow us to transfer training video outside of China. And then the US government won't let us do training in China. So we're in a bit of a bind there. So like a bit of a quandary. So where we're solving that is by literally looking at videos of streets in China that are available on the internet to understand, and then feeding that into our video training so that publicly available video of street signs and traffic rules in China can be used for training, and then also putting it in a very accurate simulator, and so it will train using sim for bus lanes in China. Like bus lanes in China, by the way, one of the biggest challenges in making FSD work in China is the bus lanes are very complicated. And there's like literally like hours of the day that you're allowed to be there and not be there. And then if you accidentally go in that bus lane at the wrong time, you get an automatic ticket instantly. So it's kind of a big deal, bus lanes in China. So we have to put that into our simulator, train on that. The car has to know what time of day it is, read the sign. Anyway, we'll get this solved. But I think we'll have unsupervised FSD in almost every market this year, limited simply by regulatory issues, not technical capability. And then unsupervised FSD in the US this year in many cities, but nationwide next year. And hopefully we have unsupervised FSD in most countries by the end of next year. That's my prediction with best data that I have right now.
Great, thank you very much. The next question will come from Adam Jonas at Morgan Stanley. Adam, please feel free to unmute yourself.
Thanks, everybody. So Elon, you've said in the past about LiDAR, that for AVs at least, that LiDAR is a crutch, a fool's errand. I think you even told me once, even if it was free, you'd say you wouldn't use it. You still feel that way?
Yes.
Care to elaborate, or just, I have another question.
Look, we even have a radar in the car and we turned it off.
I got it. All right, so you're still, yeah. People think you're crazy, but for not.
Look, I mean, obviously humans drive without shooting lasers out of their eyes. I mean, unless you're Superman, but like humans drive just with passive visual. Humans drive with eyes and a neural net and a brain neural net. So sort of biological, so the digital equivalent of eyes and a brain are cameras and digital neural nets, or AI. So that's the entire road system was designed for passive optical neural nets. That's how the whole road system was not designed, and what everyone is expecting that's how we expect other cars to behave. So therefore, that is very obviously the solution for full self-driving as a generalized, but the generalized solution for full self-driving, as opposed to the very specific, neighborhood by neighborhood solution, which is very difficult to maintain, which is what our competitors are doing.
I got it.
Yeah.
I mean, LiDAR doesn't work in the fog, guys.
Yeah, LiDAR has a lot of issues. Like I don't have some like the SpaceX Dragon docks with the space station using LiDAR, that a program that I personally spearheaded. I don't have some fundamental bizarre dislike of LiDAR. It's simply the wrong solution for driving cars on roads.
Right. You understand how LiDAR works. I get it.
Literally designed and built our own red LiDAR. I oversaw the project, the engineering of the thing. It was my decision to use LiDAR on Dragon, and I oversaw that engineering project directly. So I'm like, we literally designed and made a LiDAR to dock with the space station. If I thought it was the right solution for cars, I would do that, but it isn't.
Yeah. All right. Just as a follow-up, at CES, you said, I'm paraphrasing, that any AI will be able to do any cognitive task not involving atoms within the next 3 or 4 years. And that would imply, Elon, that before the end of President Trump's term in office, that AI would be moving pretty damn quickly into the physical world, into the world of photons and atoms. And I'm thinking, given your work with the administration, how confident are you that the U.S. will have the manufacturing and the supply base to make good on your excitement about physical AI by the by latter this decade? We seem pretty vulnerable right now. I've seen you tweeting about, Xing, excuse me, Elon, about China. Freudian slip, about China making more drones in a day than the U.S. makes in a year, and all the entanglement of the supply. So what has to happen in the U.S. to make that possible? What's your message, and what can you do about it, and what's relevant for Tesla shareholders? Thanks, Elon.
Well, at Tesla, obviously, we think manufacturing is cool. SpaceX, we think manufacturing is cool. But in general, for talented Americans, they need to, beyond my companies, beyond me and the people and my teams here. In general, we need to make manufacturing cool again in America. And I honestly think people should move from law and finance into manufacturing. That's my honest opinion. We have too much. This is both a compliment and a criticism. We have too much talent in law and finance in America, and there should be more of that talent in manufacturing. Yeah, I mean, at Tesla, we're making sure that we can continue to manufacture our stuff, even in the event of geopolitical tensions rising to very high levels.
Great. Thank you very much. The next question will come from Pierre Ferragu at New Street. Pierre, please feel free to unmute yourself.
Hey, thanks guys for taking the question. So I have a question, on deploying like robotaxis in June in Austin. So that's great news. And I was wondering if it means I can, drive down to Austin in June and try unsupervised by myself with my car,
yeah.
Or it's going to be more like your fleet testing it.
It'll be our fleet testing it. That's our sort of toe in the water. We'll be scrutinizing it very carefully, make sure it's not something we missed. But it will be, autonomous ride hailing for money in Austin in June. And then as swiftly as possible, other cities in America. And I expect us to be operating, doing unsupervised activity with our internal fleet in several cities by the end of the year. Then it's probably next year when people are able to add or subtract their car from the fleet. So, kind of like Airbnb, where you can sort of add or subtract your house or your guest room. You can say like add it to the Airbnb inventory or don't add it to the Airbnb inventory. If you're traveling for a month, you can, or whatever the case may be, you can let other people use your house, and then you can. Anyway, so that's probably next year because we want to just make sure we've ironed out any kinks. And a lot of it is, it's not like we're not splitting the atom here. It's just a bunch of work that needs to be done to make sure the whole thing works efficiently, that people can order the car. It comes, it's the right spot, does exactly the right thing. All the payment systems work, the billing works.
Okay. But then so my follow-up question would be, I have a Tesla, I have FSD, and I have to keep my eyes on the road all the time. It's super boring because I don't really need to intervene anymore. And but the really annoying thing is that I can't just check my emails. And so are you working also on introducing, like a kind of like free unsupervised where I could be eyes off and I would be able to check my email and would just need to, with a 5-second notice, have to go back and keep an eye on what's happening? Or is that something you're working on as well? Because it feels so close with V13 that I wonder if it's something we could expect for this year. It's a very selfish question I ask for myself, to be honest.
Yes. We need to be very confident that the probability of injury is low before we allow people to check their email and text messages. In fact, right now we're in this perverse situation, which you may have encountered yourself, where people will actually go to manual driving to check their text messages. Yep. So the computer doesn't yell at them, and then put it back on autonomous mode once they've checked the text messages, which is obviously less safe, significantly less safe than just letting people check their text once in a while without the computer yelling at them. Yeah. But we just want to be cautious about that at the advent of that. We're in this sort of, neither here nor there, but just for, I think it's not for many months longer. But yeah, we're in this perverse situation where people will turn the car off autopilot so the computer doesn't yell at them, check their text messages while steering the car with their knee and not looking out the window.
And there, like Elon said, right? If you have any problems with the system, and when people are not looking, that is a dangerous thing. And that's what we're trying to avoid. It's the capability is getting there, but it's not fully there. That's why he was using the term of dipping our toe in the water, then getting comfortable, then keep going.
Anyway, it's not far off. But we want to prove to ourselves, prove to ourselves, and obviously prove to regulators that the car is unequivocally safer in autonomous mode than not. And we're not far off. So this is like low single-digit months.
To the safety aspect, we did publish our vehicle safety report today, and in Q4 was one crash for every 5.9 million miles driven, compared to a crash every 700,000 miles without autopilot.
Right. So we're getting to the point where it's an order of magnitude.
Yeah, it's like 8.5 times safety. So it's just about there.
Yeah,
it's amazing.
Great. Alrighty, and our last question will be coming from Dan Levi at Barclays. Dan, feel free to unmute yourself.
Great. Good evening. Thank you for taking the questions. Elon, you've talked about the need for proliferation of sustainable transport in the past as part of sort of broader push to sustainable energy. Look, I know we've heard a lot about President Trump's plans to reverse the EV mandate, and I think there's a view that given regulation is a driver of EV uptake, this could slow EV uptake in the U.S. So what would be your view on the right policy in the U.S., given your comments in the past of the need to push for sustainable transport?
At this point, I think that sustainable transport is inevitable. I'm highly confident that all transport will be autonomous electric, including aircraft, and that it can't be stopped any more than one could have stopped the advent of the external combustion engine, the steam engine, or one could have stopped the advent of the internal combustion engine. Like even if you've been the biggest horse advocate on earth, you're like a horses are the way, not these newfangled automobiles. You can't stop the advent of the automobile. It's going to happen, and you can't stop the advent of electric cars. It's going to happen. The only thing holding back electric cars was range, and that is a solved problem.
Great.
And then as a follow-up, in the past, Elon, you had made a comment that you'd be willing to sell cars at effectively no margin to get the cars out there. And there's a comment in the release today of the rate of acceleration of autonomy efforts does impact volume growth. So perhaps you could just talk about, with your efforts on FSD, how we should think about your desire to put more vehicles out in the market to take advantage of your tech advances.
So I'm not sure I understand the question. We have a lot of cars. I mean, we've got millions of cars out there.
So is your question, Dan, that how do we marry our future growth aspects with FSD?
And go ahead and unmute yourself, Dan.
Yeah, more so just how much more aggressively you would be willing to sell your cars versus in light of your improvements on FSD.
Well, right now the constraint we're trying to solve is battery production as opposed to demand. So now Q1 we've got this massive factory retooling for the new Model Y, for example, that obviously has a short-term impact on output. But the problem we're wrestling with, in fact, we're talking that the executive team and I were talking about just before this call was how we've got to figure out how to increase total gigawatt hours of battery production this year, one way or another. That's the constraint on our output.
Great. Alrighty. And with that, I think we are all out of time for today. So thanks everyone so much for all of your questions. We look forward to talking to you next quarter. Thank you very much and goodbye.
All right.
Hello. Long call, always.
It wasn't that long. It was like an hour.
No, I think honestly, just because of the time that we started, it's like my back is hurting now. I was getting sick of it.
I mean, we've been live for 3 hours.
Yeah, yeah. I should say long live stream.
Yeah. So maybe let's just share some thoughts and then we can carry on with our lives.
What I love about Tesla is, especially with Elon Musk being on the side of this, you probably saw the comments from both channels. It's one of the craziest stocks where people will still tune in, listen to the entire earnings call, and absolutely hate the guts of both the company and or the owner.
Yeah, it's polarizing.
So polarizing. And it's phenomenal, right? Like I'm happy to have the conversations and everything. People think I'm going to ban them because they don't like Elon or something. It's absolutely not the case, but it is interesting to see it because I have very strong views about the strength of Tesla. I've been sorry, I'm looking up like crazy. It's where you are right now while I'm looking. Okay, that probably looks a little bit more natural. But yeah, it's just crazy how the company has been so divisive, and I've been a very, very strong follower of both Elon and Tesla. Not for political views, but for Tesla and innovation and pushing technology forward.
Yeah.
Sorry, more company, more quarter related. Optimus sounds great. The Airbnb style thing sounds like it's still a go. They're planning on doing that.
Uber style thing? Uber style thing, you mean?
Well, he compared it to, I mean, Uber, sure, but I like the Airbnb thing of, hey, you can either select to put your vehicle on for the day or for the week or for the month or not at all. And it doesn't matter. And we can take a percentage of your revenue or we don't have to if you just want to have a personal vehicle.
Right. Yeah, I think, I've been a part of these calls for the past 5 years now. I mean, going on 6 years. I guess this is my 6th year. And Elon on the calls, I think, has evolved somewhat because lately, over the past 4 conference calls or so, he's just been so much more pumping to the point where, like, on this call, he just and I know he's probably doing it because he's just excited, and that's the easiest way that he can express that excitement. But he just sounded like he has like short-term calls that he just bought. You know what I'm saying? Like he sounded like he had a personal stake in the stock going up in the immediate short term because of all the things that he was saying. Whereas in the past, I mean, I think 4 quarters ago, maybe 5 quarters ago, we heard for the first time that he thinks Tesla can be the most valuable company in the world. And then sometime in between since then and now, we heard that Tesla could be more valuable than like Apple and Microsoft combined. And now it's like more valuable than the top 5 combined. And I understand the logic of how he's getting there to say, hey, if we can crank out 1 million of these bots and sell them all, not even sell them all for 20 grand a piece, but like just the productivity unlocks of all of those, you can have value that gets there. So it's definitely autonomy and robotics that he's leaning on to make those lofty assumptions. I did also enjoy that he was somewhat measured by saying, hey, look, we're laying the groundworks in 24, we're laying the groundworks in 25, 27, 28 is really when you see it go ballistic. 26 is going to be a great year, but in the next 2-3 years is really where you see it pop off. And that's great because it's the beginning of 25 right now. And so he said, hey, this is going to be a pivotal year, but it's also still a groundwork year. Like he said both of those things in his opening remarks.
What I think is important to measure, which they actually don't show off a lot in the earnings calls, but sort of a non-GAAP or key business metric that I would look at for Tesla that I don't think a lot of the Tesla bears do, which they tried to highlight in the call, is the miles between disengagements.
Yep.
Or FSD miles between disengagements. And that is so crazy because ever since the Transformer and AI started to blow up, this has just been on like everyone has talked about how, Elon has been talking about FSD for a decade now, and that is true, but only since the last 2 years or so has it just gone exponential. Like it's just a hockey stick increase of miles since disengagements, and that's only going to get better because the tools that they're using to find the problems in FSD are also getting better. Okay, so the AI is getting better, and FSD, the more miles they get, obviously they can train on better equipment. So this is just S curves on top of S curves, and it's funny how some people, I find, they set the timelines. They're talking about Netherlands. Yes, there's some political issues there. Yes, it'll be a harder industry because there's different types of traffic. They're obviously being the country with the most amount of people on bicycles and, pedestrians just walking and everything. It is new challenges to face than potentially what you're facing in North America. But the idea is that some people think that that's 10 or 20 years out. I couldn't imagine at all. We are in a moment right now where we're 10, 20xing per year the miles between disengagements. This is right around the corner. And that's what I think is the most incredible part about investing right now is I find all of these insanely innovative technologies are all right now around the corner. And it's just a matter of if regulation is going to be there to step in its way or favor and push them further along. And it's seeming like they might be more on the side of pushing them towards, being a little bit of a tailwind rather than a headwind.
Yeah. So I just want to recap a couple of major things that quotes, if you will, on the call, and you can pause me at any time to emphasize a point, ask a question, or if you want to make it a topic of discussion. So on Optimus, he said that the training needs for Optimus are probably at least 10x of what is needed for the cars, which is obviously good for NVIDIA and other chips out there. Unsupervised FSD in Austin in June, and then also in California around that same time. And he was saying the rest of the country by the end of the year 2025. And the reason for that timeline is out of an excess of caution as opposed to anything else. He just wants to be careful. Confirmed several thousand Optimus bots produced by the end of this year. And he said, my prediction long-term is that Optimus will be predominantly the worth of the company.
Which I said before the call.
Yeah. Still on track to launch a lower cost model in the first half of 2025. We're seeing a significant interest from a number of car companies to license our FSD technology. He said, rough guess, but probably we're going to start delivering Optimus bots to other companies by second half 2026. So from this year and the first half of next year, it's probably going to be all internally. We're just working at Tesla. Probably all 26, honestly. And probably by the end of 26, they'll start sending them to other companies. And I just modeled this out, Tannor, and I'd love to get your thoughts on it. Because he said, Optimus growth will grow production growth is going to increase by 5x per year. And I just did a little, me and ChatGPT did the math together. 500% a year, starting at 10,000 units in 25. I mean, he said he doubts it's going to get to 10,000, but let's just say it's 10,000. That's 50,000 by year 2, $250,000 by year 3, so on and so forth. 156 mil by year 7. That's assuming a 5x, and that's assuming we start at 10,000.
Yeah, I think near the later stages, the growth is not going to stay what it is. So I think a couple things. One, year one's not going to be at 10,000. I'd probably put it closer to 2,000.
Yep.
And near probably past year 4, this is where I think the scale will go down a little bit. However, I don't think that this is going to be like, oh, we found one set way to make this robot. Okay, now let's make 156 million of them. I think this is going to be more along the lines of like any other product iteration ever, Gen 2, Gen 3, retooling for manufacturing for this. It won't be that fast.
Well,
like you said, it's going to be a faster ramp than anything. So how can I put past products on what this will be into the future. But yeah.
Yeah, one of the things that he mentioned on the call to try to frame it differently was that an internal KPI was, okay, how many robots do we produce per week? And then it's how many hundreds, how many thousands, how many tens of thousands of robots do we produce per week? And then how many hundreds of thousands of robots later on down the line. So I think that they can just model that out on in term like similar to the car, right? Because in the car right now, they're looking at weekly production and they're just multiplying it out to get the yearly production number. If they can get that assembly line working, and then you have to keep in mind that like at some point, everybody in the assembly line will be an Optimus bot. That's the assembly line creating more Optimus bots, going 24 hours a day, 7 days a week, nonstop. Like that thing is going to be way more efficient than the car business because it's going to be simpler to put together, most likely. And I mean, they're smaller units, right? So I don't know. It's going to be interesting to see, right? If they have several thousand of these things working at the factory by the end of this year, then that's just 24 hours a day free labor, learning about the factory on the production line, doing repetitive tasks. It's just going to be crazy, man, because it increases the value of all their other manufacturing lines today.
Yeah, I mean, there's going to be some level of taxation, I believe, here. So I don't think I don't like these comments when people say free labor. It absolutely won't happen, in my opinion. Like I'd bet I'd bet my whole book on it.
On what?
On the fact that I think there will be massive taxation on humanoid robots.
The taxation conversation, I think, will only start once you have massive displacements across multiple industries. That's not going to happen for a good while. Right now, what's going to happen is they're going to produce several thousand of these robots in addition to all the humans they have. They have over 100,000 employees or something like that. No, or 50,000 employees, something like that. So they're not going to be displacing jobs with robots as early as this year, probably not as early as next year, and they won't even be introduced to other companies until the end of next year. And so what you're talking about might happen, but it's not going to happen under Trump, that's for sure. And
no, I don't know. I don't know the timeline here. I don't know the timeline. We also have to remember Optimus is not the only company doing this. There are dozens of companies that are creating humanoid robots, and it'll happen faster than just what Tesla can output. Because not everyone's going to want to buy Tesla at its valuation whenever they can buy a zero revenue business, buying some straight startup doing just this. But I think the problem really, what's going to happen is that unemployment will eventually start to see a material change. And then as there are certain people that cannot find new work, and even if this goes up by 1% or something like this, where people are looking for new work and can't find it, the Fed is going to try to fight that and have their policies. They're going to realize that they can't make any difference, and this is not a policy matter. And then they are going to look to greater forces to say, hey, actually, there might need some UBI changes or something like this. And then where does the federal government get that funding from? Why would they get it from anywhere other than the companies that are displacing them themselves? So taxation on AI tokens, on robotics, I think I see it as guaranteed. I don't know how everyone would just let billionaires get away with it. The people with the most amount of capital are to benefit.
The same way that they let billionaires get away with the internet, with social media, with cloud, with everything else, all the way going back hundreds of years, if you want to even go back that far. It's going to happen, man, because like the politicians at the end of the day are just entrenched with that elite class because they all are shareholders of these companies. Like, you tell me that all of these politicians who are buying up Tesla stock are going to be the same ones voting to tax Tesla stock on the robots. It's never going to happen. And maybe it does happen only when it becomes like a serious existential problem across humanity. And that's probably, over a decade away from now.
Yeah, it could be the case. It could be the case. Either way, I think whenever looking at traditional valuation metrics on Tesla, they're going to be out the board for the next decade again. there are companies that trade at higher valuations because people see the future for those companies differently than potentially traditional businesses. Tesla falls into that. There were a couple people whenever I said innovative technology, and they said, "What innovative technology?" It's like, oh man, everything that Tesla has ever done.
It's crazy because like people saw the Optimus release or the announcement and they said, "Oh, you're never gonna see these things on the streets." Like, and then one day, I saw one on the street, and then I saw another one, and then I saw one parked outside my building, and then I saw another one, and it's just wild because I know that the same exact thing is going to happen with an Optimus bot. There will come a day where I'm going to see an Optimus bot holding a bag of groceries for some old lady walking down the street, and it's going to happen, and it's going to be like a complete mind fuck because right now people struggle to conceptualize and wrap their head around this being a reality, but they're making progress every day. They're making more of these things every day. It's going to happen.
Yep, and more progress than their competitors. And I'm telling you, traditional automotive OEMs are in serious trouble here. And I know a lot of people think that because they own a Honda or a Toyota or some of these vehicles that they're going to be around forever in the next era. And I honestly don't think that's going to be the case. And I don't think that licensing out FSD is going to change any of that, by the way.
Let me ask you this just before we log off. What do you think the stock does tomorrow? Do we give up these gains? Do we run or do we hold?
You're asking me things that I have no opinion on. Like, I'd so much rather talk about the things that I have opinions on than what the stock is going to do tomorrow. I have zero idea. I think that it's positive, but then things can always, I don't know. There's too many things affecting a stock on a day-to-day basis. I can never try to anticipate that.
Well, let me ask you this then. Is there something that we haven't touched on yet that you want to touch on before we log off?
No, I don't think that serial founders that have a 99% plus success rate should be looked at by their 1% failures. I'd bet on the 99.
I mean, I get both sides of that argument because people are critiquing this earnings by saying like they missed on all the, major metrics and yet the stock is up, that it's not really fair. And then the other people are saying, oh, well, robotics, FSD, this and that. And other people are saying, well, that's just, long dated hype built into the stock, overvaluation, whatever. So I kind of get both aspects. It's just whatever you're investing for.
Well, yeah, I'm young. I'm investing for long-term growth, companies that'll take decades. Yeah, I don't mind people having their opinions in the chat, but if you're spamming, you're going to get banned. I'm sorry. But yeah. Anyway, so yeah, I'm good to wrap. I think yeah, I love the future, and I love that things keep pushing forward, and eventually I'm going to have my own humanoid robotic or humanoid robot folding my laundry and making me dinner and everything like this.
I'm gonna have that thing download all my public content so it learns my voice, and then it's just gonna hop on live streams for me.
No one will listen to that.
It's gonna be the new Tevis.
But what was I gonna say? There's been a lot of people who have been talking a lot of crap on Elon for the last 10 years, and they're not even around for me to tell them I told you so anymore. So yeah, good luck to those people. But don't talk to me next month. Talk to me in 2035 whenever you've been proven wrong.
Lost in BKK asked if my Optimus bot who's live streaming on behalf of me will show up on time.
That maybe not.
If it's my bot, it will. Tanner's bot, if it downloads Tanner's content, will always be late. It's a certainty because YouTube records when you start and when you're expected to start. So
Yeah. All right, ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. Bye-bye for now.